Thank you for joining us for today's TFIC Investor Conference, our first ever. I'm not going to spend too much time in front of you. The main attraction, my mother, the head of Trinity Financing, my boss, probably first, Miss Trinity, is going to introduce the conference to us. So,
hello everyone. Today we have a great opportunity to hear directly from the founder and CEO of 7 different companies. So feel free to make any question you may have to help you to design wherever you like to invest in the company. And right now, Jimmy, please take over. He will conducting the Zoom meeting today. Thank you. Bye.
this presentation may contain forward-looking statements under applicable securities laws. These are based on current assumptions and involve risks and uncertainties that could cause actual outcomes to differ materially. Such statements may cover LifePulse's and the other companies' strategies, project development timelines, and supply chain management structures, financing plans, market conditions, and more. They are not obviously guarantees of future results. We strongly advise all participants to perform their own due diligence and consult professional advisors before making investment decisions. All right, so our first company of the night is LifePulse Bioscience.
Let's jump right into who LifePulse is. LifePulse is a medical device company that is comprised of 4 divisions: human health, animal health, pharmaceutical, and research. And we are using a newly issued patents with an old technology. Electroporation has been around for 60 years. And the high end of it is what you may be familiar with Medtronic using for treating of AFib. The lower end, the lower power, is just to create permeability for cellular delivery of therapeutics. And that is what we're doing to improve outcomes in both human and animal medicine using minimally invasive cancer treatments. The proprietary platform is called IntelliPulse, and there's a lot of changes with it compared to the old technology. And right now we're sitting at about $2 million worth of secured orders, 20 issued patents, and we're perfectly positioned to redefine cancer care across multiple markets. So why did we look at veterinary medicine? Well, 90% of the 6 million dogs diagnosed with cancer each year are not treated. And the primary reason for that is money. So what happens when your dog has a tumor? First of all, you recognize there's something there. You take the dog to the vet. The vet says, your dog has XYZ tumor, and here are your options. Here's your treatment plan. Well, the first thing they're going to suggest usually is surgery, which is very expensive and sometimes not a good idea, depending on the tumor type, because it can cause it to spread very quickly. Then there are also some alternative treatments that are newer drugs that are not really friendly to the animal. They're also expensive. And then there's radiation and systemic chemotherapy, which is the most expensive, can run anywhere from $10,000 to $30,000 to treat your dog. So the need is huge, and we are after the 70% of people who would love to treat their animal, but the standard of care is just too expensive. And they don't want to put their animal through the side effects of, just like with a human. Systemic treatment is painful. It's horrible what it does to your body. It does the same thing to dogs and cats. So if they had an option that was much less expensive, but just as effective, we know that 70% of them are going to take advantage of it. So the solution is our IntelliPulse system, and this is the VetPulse 2000 device. It is differentiated in several ways, as we'll tell you here in a second. But the numbers there on the bottom just give you an idea of what the first markets that we're looking at. It's almost $60 billion worth of cancer spend between pancreatic, breast cancer, and skin cancer every year on the human side. And on the veterinary side, it's near $1 billion just in the US. So how is it differentiated? Well, the IntelliPulse platform uses, first of all, heat. The scientists discovered that if you heat the tissue to 43 degrees centigrade at the time that you pulse it, it doesn't require all that energy. So previously, the old technology required 1,300 volts per centimeter to work at all. And we're using anywhere from 150 to 600. And we're reading impedance feedback in real time. What does that mean? All tissue has an electrical property. And as you pulse an electrical field into it to create permeability in the cell membrane, that property drops. And what our device is looking for is a certain percentage drop. And when it achieves that, the device knows and just stops pulsing. The old systems always either over or under treated, and either one of those outcomes are not good because one of them causes damage to the healthy tissue and the other one doesn't completely get at the tumor. So our device solves those issues. If you can see the pictures down here, you see the cell membrane prior to being pulsed is closed. The reason we have to have 30 rounds of chemo is because you can't put that molecule in the cell. But then when you put an electrical field into it, it creates pores. Electroporation creates pores on the cell membrane wall. And then after you finish, it closes back up and it heals. We're not trying to destroy the cell. We're just trying to open it up. So these are some pictures before and afters. This is a horse that was treated in Maryland, had a massive 9 by 8 by 5 centimeter sarcoid on the side of his head. And we treated it 3 times. And after 90 days, we have this result. This little dog here had about 15 or 20 squamous cell carcinoma on his nose, and we treated, and I believe we've got 3 left to go back and get. And this is just after 2 weeks. This picture here is from the first human clinical trial that Dr. Heller did at Moffitt Cancer Center in the 90s. This is a melanoma. It was treated 1 time with what would today be considered a test dose of bleomycin, an old chemotherapy drug. And 30 days later, you've got this amazing result here of you can't even tell that it was ever there, as you can see here. This video is of a cat being treated for squamous cell carcinoma. And you can see the cat is sedated. The white liquid in the Lurlock syringe is propofol, just what we would have for a procedure. And you can also see the needles being inserted directly into the tumor itself. Well, that's really important because that enables us to get into the tumor. The drug's already been injected 5 minutes before we started. And now that tumor is being opened up to receive that drug. And the result is that cat was completely recovered, had no further ongoing issues, and now does not have cancer. So what are the addressable markets like? In animal health, the reason why we went here first is because this requires no FDA, there is no FDA path. There is no 510K, no PMA, no de novo, doesn't exist. So you just make what you're doing and go. So we did, and there's 38,000 companion animal practices, that's dog, cats in the United States, 2,000 equine practices. Brazil and Argentina, the old technology down there is the standard of care. and they are begging for us to come. We're going in November. They understand the difference because they're very familiar with the technology and they want us down there. 10% of the US market, because this is not just a device sale, this is a device and a disposable called an electrode. The electrode pops on the end of the handle, pulses the field, and then you throw it away. So 10% of that market at 15 procedures per month on average is about $900 million of recurring revenue. In the human health side, our first clinical trial will be for pancreatic tumors. There's 70,000 pancreatic surgeries every year. There is a $2 billion surgery market, the Mohs surgery. That is a surgery that my friend in the picture here had, where they basically put you in a chair and they cut a slice, freeze it, come back 45 minutes later, cut another slice until they don't find any cancer. Well, you can be in the chair anywhere from a couple hours to 10 or 12 hours, like my friend here was in the chair for 10. And you can also see that the melanoma, the pictures there are post-ECT. You don't have any scarring. My friend, unfortunately, was subject to that. So what's our revenue model? The direct device sales, of course, there's a $28,000 price. The retail's $34,900. The newer iterations coming out will not have discounts like they do now, but right now we're at $28,000, roughly a 57% margin. The disposables per procedure run about an average of 150, and they'll average about 15 per month. Those have a 75% margin. On the human side, on the human side, if I can go back up, we think that the dermatology device will run about $50,000 and be $400 single use, the $100,000 in the hospital and $5,000 single use, and probably around the same margins. We expect to achieve breakthrough status, which will give us our Medicare, Medicaid codes, according to the Center for Medicare and Medicaid. So orders and options. This is a purchase order from Louisiana State University Vet School for Small Animal Hospital. You can see that the amount's $28,967, and that's off of the $34,900 retail. And we have a co-branded leasing agreement that many of these standalone hospitals take advantage of because it gives them the ability to delay the payments anywhere from 60 days up to a year so that they can build their case count up. And the strategy there is that they don't ever come out of pocket except for the electrodes before they're making money. Once they're doing one case per month, that pays for the device. Everything else is profit. And they'll net about $800 per case. So the traction that we've received so far, the market validation, 2.2 million roughly in device orders. We expect to do somewhere between 5 and 20 million in the next 12 to 24 months. We have 20 patents. There are now 2 pending. We've got at least 15 years of protection there. We also are the happy recipient of $35 million of non-dilutive investment in the form of NIH and NCI grants to the universities and to the company. We're about to get another $2 million SBIR direct to phase 2 grant for a translational trial in canine metastatic melanoma. On the regulatory side, we filed a pre-submission to the FDA and have permission to use the NanoKnife, just like Medtronic, J&J, Boston, and Abbott have done for their pulse field ablation devices. And then we will file for our breakthrough, the IND and the IDE for drug delivery. On the veterinary side, we're down to we're at terms, and hopefully we'll sign the agreement with Patterson Veterinary. They are a $6 billion veterinary device or veterinary distribution company worldwide, and the agreements for the US, the UK, and Canada initially. And then we are in discussions with some of these companies. They have all expressed an interest. Some are further than others, and we'll see where that goes. So the timeline. In 93 to 98, Dr. Heller ran the phase 1 trials at Moffitt Cancer Center for treating metastatic melanoma. In 97, that was published in the American Academy of Dermatology. In 2000, Dr. Heller, Dr. Jaroszewski, and Dr. Gilbert wrote the textbook that still is used today, and you can order it on Amazon. In 2001, it was published in the European Journal of Cancer Liver Tumors. 2010, the first multiple electrode array publication came out, and that was a game changer. In 2012, Dr. Heller did gene transfer to the beating heart of swine for regrowth of healthy tissue and treating of ischemia. In 2016, the first in vivo paper for using heat came out. In 2018, this company was born. We started as a distribution company for the French veterinary device and then met Dr. Heller. In 2022, we had already acquired the patents and were building our first prototype devices. So we spent 2 years traveling around the United States, treating dogs, cats, horses, and even a rat for cancer. And in 2022, we did the first standing equine treatment ever done with this modality. That's never been achieved, and that was amazing to watch that happen. In 2024, late 2024, we launched a VetPulse 2000, and as we said, we're sitting at about $2 million in revenue and expect to sign with Patterson anytime. And in 2026, with Patterson, we expect to cross the $15 million revenue mark. So the leadership is me, as CEO and chairman. Frank Carlier is the chief technical officer. Dr. Gerald Sokol, chief medical. Bill Gilmore is our CFO. Dr. Michael Francis is a world-renowned scientist, inventor, is being inducted into the Inventors Hall of Fame. More than 100 patents, 100,000 patients, $500 million of revenue generated by his efforts. And on the scientific and regulatory consultants, Dr. Heller, of course, Dr. Jaroszewski, both of them are in the National Academy of Inventors as fellows. Dr. Chelsea Tripp is our veterinary consultant. Dr. Fleming is the head of Connexa, our FDA translational guidance company, and Rick Flath is our senior advisor that has run his own private equity firm and is the co-chair of the New England Licensing Executive Society. So what are we looking for here? We need to raise $12 million to cross several timelines: the IntelliPulse delivery for veterinary application, building the surgical device, which is our 510(k) device, engineering and building the dermatology device, which is the second clinical trial, crossing those regulatory pathways, achieving 10 million in veterinary revenue, and bringing on some other rock stars in the med device space. The cap structure right now, the share price is 4.61. The PPM is coming out with a lower share price and is going to be very favorable for investors for preferred shares. So look for that to come along with what you'll receive. So we thank you very much for your time, your attention, and please let us field some questions. We would love to answer them. Thank you.
Very good. Thank you. Let me see. Thank you, Gary. Let's just jump in. We have some time. We have about 9 minutes. So let's do number one. How is Patterson Veterinary enabling scale, and is their buy-in contractual or discretionary?
That's a great question. So Patterson is required to buy in. The only way they get paid, the only way they make any money is by buying in and increasing their sales.
Very good. The next question is, given your seasoned team and early traction, are there active conversations with strategics like Medtronic or Intuitive about licensing, co-development, or outright acquisition? And if so, how would that look?
That's a great question. We, uh, as you know, those kind of deals can be structured a thousand different ways. Um, the Intuitive flew Dr. Heller out to spend the day with them a little over a year ago, and we're still talking with them about what they want to use our technology for. We know there's interest from a couple of other players. Can't really talk about that quite yet. We are under NDA, so we can't, but yes, we intend to do that. We intend to either spin off the animal health side, um, license for field of use. Like I said, there's a lot of ways to do that deal, and we'll work toward the most advantageous one for the shareholders.
Excellent. How will the dermatological and surgical human use devices integrate with existing clinical workflows? Are you designing around MOHS surgery timing or envisioning standalone use cases?
So what we're planning to do in the dermatology space, we're going to partner with a company called Novascan, Richard Piazza, that you saw as a board member. Well, you didn't see, but Richard's a board member. Richard sold that company to Panasonic May a year ago for 130 million, and they have a cancer detection device. It's not a diagnostic, doesn't tell you the type of cancer, it just tells you, oddly enough, using impedance feedback on a specific wave, if that tissue has cancer. We're going to go to the regular dermatologist, not Mohs surgeon. Mohs surgeons are going to hate this because we're going to cut into their business. You can be in and out of the chair with our procedure using Novascan's detection device, just like they would in Mohs to detect cancer, except you'll be in and out of the chair in 30 minutes. You won't feel pain, you won't get cut, you won't have a scar, but you'll still be cancer free.
Very good.
Oh, by the way, on the pancreatic side, yes, the surgeon that is doing our first clinical trial does not like using the nanoknife. That's what he's using currently and has for a long time. But he understands our technology, knows why it's going to be better for him and for the patient. And so we expect to fully integrate that at two levels, one for ablation that is the 510(k) predicate, and the other for drug delivery, which is the breakthrough status.
We have many, many more, so let's just keep going. For the VetPulse 2000,
Okay.
are there any active studies quantifying local recurrence or tumor-free survival versus surgery or radiation in companion animals?
Yes, as a matter of fact, there have been several studies uh, similar to that or right along that line with the old technology that's been around. It's been the vet space for, gosh, 15, almost 20 years in Europe and about 15 years in the US. And we have a study that is just being published that shows that our technology is 75% more effective than the old technology. We have a study that is going to be published soon that does show the non-recurrence rates and the overall 100% objective response rates. And a third study that is going to, that's what the $2 million SBIR is for. It'll be a 2-year study that will start soon for a clinical trial. It's translational for canine metastatic melanoma, and that will be at Purdue University is the primary site, and two private sites, one in Seattle and one in California.
Off of that, have you observed any measurable differences in tumor response between your veterinary sarcoid and squamous cell carcinoma cases that could inform indication expansion or protocol refinement?
Yes, that's a really good question. So we keep dialing this in and plan to use AI in the VetPulse 3000, which will have two additional components to it, just like the human device. We're going to build AI into that because we are seeing, because we don't require the amount of power, we also don't require the amount of drug that the old technology does. So the old protocols that were written, the latest ones were written in 2022. The two veterinary oncologists and the scientists that wrote them are all part of our group. Those two vets are in Brazil and Argentina. They're two of the people that invite us to the University of Buenos Aires that we're going to in November. We know that we're going to need to continue refining it because the better this gets, the less drug and the less power that it will require to accomplish better results. If that makes sense. So yes, there'll be an ongoing revision until we perfect it.
We've about time for one more question. With the 35 million in non-dilutive flowing through university partners and to the company, what steps are being taken to centralize IP control and convert academic work into commercial milestones?
That's what we're doing, period. We've already converted the patents into commercialization on the veterinary side. We are actively working toward Rick Flath, who is the co-chair of the Licensing Executive Society in New England, and our scientists have been working for several weeks now on our IP strategy, and so we're excited to finalize that. So yes, we're paying close attention to that, and our licensing deals with the universities are. I don't think we'll ever get those again. They're too good. they're exceptionally good, and those license agreements, should someone want to take a look at them, there will be bits and pieces of them. All of it we can't disclose for the universities, but there will be bits and pieces of them put in the data room.
Excellent. With that, I'll just kick it back over to you briefly for 15 to 20 seconds to close it out and tell everyone how they could reach out if they're interested. And I'd like to thank you again, Gary, for joining us for the Trinity Financing Investor Conference.
Thanks, Jimmy. I really appreciate the opportunity. And the only thing that I would tell you is that if you you can invest in a lot of things, and there'll be several other companies after us that certainly are outstanding companies. It's not often that you get an opportunity to invest in something that is a game changer in medicine that could impact millions of lives. This is what LifePulse is. Thank you.
Our next presentation will be by Greg McKenzie, CEO of Silverstorm Mining. Silverstorm is traded on the TSXV under the ticker SVRS.V and on the OTC under the ticker SVRSF.
Okay, well, good afternoon, everyone, and thank you for joining this presentation and hearing a little bit more about Silverstorm Mining. I'll speak for 15 or 20 minutes and then stop so that you can ask as many questions as we can fit into the time period. Okay, we are looking to restart the La Paria mine that's located in Durango State in Mexico. It's a former producing mine, and I'm leading the effort. My name is Greg McKenzie, and I'm the president CEO of Silverstorm Mining. The asset that we're primarily focused on was formerly owned by First Majestic Silver, several billion market cap company. This mine was their very first mine, and as you can see in the far left column, they produced 34 million ounces of silver equivalent from 2006 to 2019. Due to low metal prices, they put it on care and maintenance in 2019. And then we purchased it from them in August of 2023. We purchased it because of the fantastic geological potential, the in-place infrastructure valued at least $150 million US, a 2,000 ton per day plant, ton per day mill and plant, and a partial mining fleet. And our thesis was that because it was only modest restart capital, if we could drill it over the next period of time, we would be able to create a really good value proposition for our shareholders. So column 3, you can see we did 18,600 meters plus of drilling from August of 23 to the fall of 24. And then we put out a new resource with SRK. We doubled our indicated resource and we increased our inferred resource by 58%. For the restart, it's about a 6 to 7 month restart from the time we're fully financed, according to the technical people. And as a manager, I've added 2 to 3 months on top of that. So I'm guiding to 7 to 9 months from being fully financed. We also, in the 4th column, we also have another asset, which was our first asset. It's really a very large silver equivalent resource. It was discovered by the prior management team. They put out a 2013 43-101 on the San Diego deposit that had a resource of over 210 million ounces of silver equivalent. Since we took over the company in 2020, our management team spent a couple years drilling San Diego. We were very successful, but then we wanted to be in production, so we agreed to do a deal with First Majestic on La Parrilla. This is our capital structure. As of July 21, we were trading at about a 110 million market cap. I think we're at about 130 million market cap today, somewhere in that range. We have First Majestic as our largest shareholder. They got their participation from trading us the La Parrilla project for shares in our company. And so they are very good shareholder to have on our register. Eric Sprott is our largest individual shareholder. He's at around 12%. And you can see that insiders management, myself primarily, have another 2%, and then the rest are other holders, including a number of the institutions that came in. As of that date, we have about 20 million Canadian on our balance sheet. We did a couple transactions over the last 3 months to raise that capital, and this capital is allocated for the restart. We still are yet to close a offtake agreement. Really, it's a prepay on our metal production. And as per our May news release, we told the market that we'd be raising about 15 to 17 million US dollars to fund the restart. So together with the funding that we already have on our balance sheet, that would be more than enough for the restart. Currently, we're covered by Red Cloud Securities, and they have a 28-cent target. We think our stock will go much higher once we show that we're going into fully financed and going into production. Okay, a few slides about the silver market. Silver is one of the most conductive metals. It's one of the best performing commodities in 2025. Everyone should own some precious metals in their portfolio, either the bullion or silver equities. What we can see in the market is that over the last 5 years, if you look on the right side of the screen, the red box shows you the last 5 years of deficits in silver market. That means the demand for silver is greatly outstripping the supply from mining for silver. And so the balance of that supply is coming from recycled material. But you can only recycle silverware once, and then it's consumed. So we're continuing to see this deficit, and don't be surprised if we get significant upside shocks in the silver price, because as this deficit continues, the silver will have to come from somewhere, and so that will force silver prices higher in order to spur new supply. So what are the uses for silver? AI usages, electric vehicles, high-end electronics, and primarily photovoltaics. And photovoltaics are really used for solar panels. Very large solar panel farms are being built in Asia, and that's where big growth is for photovoltaics and solar panels, and we expect that to continue. Although the U.S. is far behind, it's the largest economy in the world, and it wouldn't take much for the U.S. to get into this sector, and you can see the demand for silver would grow exponentially. Most of silver is byproduct. You can see by this pie chart below. Primary silver production is about 28%, and the rest of silver production comes from byproducts. What that means is you would have to have a significant increase in capital investment for byproducts before you would see silver production move up appreciably. And so there's a lot of headroom for a small producer like us. We're going to be producing about 2.7 to 3 million ounces a year. There's a lot of headroom for silver prices to move higher before there would be a supply coming onto the market that would curtail the upward trend in silver prices. I could say much more about that, but I'll leave it here for the moment. If you prefer to look at silver from a more technical perspective and you consider the gold-silver ratio, each one of these red lines, if you're looking from left to right, it's a slide down. These are reversion to mean lines. And what that means is over most of the history of gold and silver, say the last 30, 40 years, it's traded in sort of a 65-to-1 gold-silver ratio. And every time the gold-silver ratio gets up, you can see in the mid-90s, it got way up to over 100, and then there was a reversion to the mean. So then that means silver price is going higher every time there's a reversion to the mean. So we had a 100% increase in silver price in the mid-90s. In around 2010 global financial crisis, we had a 400% increase in the silver price. Right at the beginning of COVID, we saw a 138% increase in the silver price. And again, you can see that the gold-silver ratio is around the 100-to-1 level, and a reversion to the mean from where we are today could see silver prices going from $51 to $82. That's what this slide is telling you. Right here on the far right, a reversion to the mean would drive silver prices much higher. And typically, the metal, the commodity will move up in price. So you could have like a double in the metal price, but a double in the metal price would imply a 4x in the equities. So where do you want your money to be? Some in the bullion and some in the equities. And this slide is just telling the same story, but in a table form. You can see at the top, the top heading is the gold-silver ratio, and on the left heading is the gold price, and in the middle of the table is the implied price for silver. On this slide, you can see where our assets are located. The San Diego asset, so we're located in Durango State. Our San Diego asset is the first asset that we had that was discovered back in 2013 and before. And then the La Paria is the mine we purchased from First Majestic, which is very close to Durango City. They've been mining in the state for over 500 years. Currently, there's 23 producing mines in Durango State. Very easy to get there. We typically fly out of Toronto early in the morning. We make a late morning connection in Dallas, Texas, and then fly on to Durango City. And we're at the mine at La Paria by 1 o'clock. So it's very easy to travel to. Excellent infrastructure. We're on the grid, and everybody likes to, the asset just really shows well. Everybody likes to those who've gone here to look at the mine really like the tour. So here's another aerial picture of the plant. As I mentioned, it's a 2,000 ton per day facility. One of the keen or more interesting points about this mine is that it's 2/3 silver and 1/3 lead and zinc. There's a bit of gold in there, but we just lump that into the silver. It's like about 1 or 2% contribution from gold. So this deposit is anomalous in that it's 2/3 precious metals. Most silver, lead, zinc mines are about 40 to 50% silver and the balance lead and zinc, but this one is 2/3. This is the resource statement from SRK that I mentioned earlier. We got 27 million ounces of silver equivalent. If you add up right in the middle of the page, the 10.8 million and the 16.3 million below. So that if we're producing 2.7 to 3 million ounces a year, you can see that we have at least 10 years of resource if it all went into the plant. In addition, we have about 3.8 million ounces in pillars that First Majestic routinely mines at their other operations. And so we expect that we will recover much of these pillars as the years go by. These are the underground mines, Rosario, San Marcos, and Cabrillas. It's all underground that we'll be doing. We're fully permitted. Many folks don't appreciate the value of having a permit already. Permits in mining can be very difficult to get, even under the best of circumstances. And having a fully permitted mine is such an advantage. So that's really good for our company. On the next few slides here, we just detail some of the places where we did drilling. You can see the green and the purple, the two different phases of that 18,000 meters of drilling that we did. And here are some of the key highlights. For example, in the Cabrillas area, 14.8 meters of 500 grams, 14.6 meters of 1,810 grams. So well above cutoff grade and very profitable for mining. The key takeaway with all of these that I'm showing you is that the veins are open at depth. So we will mine, produce silver, develop more, drill more, and continue chasing the veins on lateral extensions and at depth. Same story at Rosario's. This was our risk when we acquired the asset. You didn't know whether the veins continued. We believed they did, but you can only prove it with drilling. And so that's why we did all that drilling. And the drilling showed that it continues to be open at depth. That means there's nothing geologically that says that the veins don't continue, and it just needs to rely on drilling to prove the case. So that will be an ongoing thing as we're mining and producing silver. And the same thesis applies at San Marcos. You can see that it's open at depth. Also, we have some high-grade stockpile on the right side of the screen. These stockpiles will be blended in with run-of-mine ore and put right into the plant. When they put the mine on care and maintenance, they just left the stockpiles where they were and didn't produce them. On the left side of the screen is an oxide stockpile. There's about 1 million tons of lower grade material there, and it's worth about $50 million in today's prices. And we will consider producing that at some point in the future, but it's not part of any of our plans today. So where are we? We're working on the debt and offtake agreements, and that should close. Our expectation is it'll close soon. And then we're targeting production early next year, meaning 7 to 9 months from being fully financed. And I'll stop there. It's 5:48, and maybe a couple points about San Diego, our other assets. It has, as I mentioned, over 210 million ounces of silver equivalent based on the 43-101 that was completed in 2013. Our additional drilling from 2020 to 2022 has not been included, and so that's to come in the future. It is now, based on that resource, the third largest undeveloped resource for silver in Mexico, and so it has a lot of value. We had 100 million market cap just on this asset alone back in 2020 and 2021 before we acquired La Parrilla. So there's a lot of value here, and we're looking forward to that. Once we're in cash flow from La Parrilla, we can start spending some more time and attention on San Diego. Okay, folks, I'm going to stop there because it's almost just 10 minutes left. So if there are any questions, I'd be happy to answer.
Very good. We do. First question is a little generic, so I'll make it a little more specific. Could you talk more about Mexico and the particular part of Mexico that the assets are located in and how that's advantageous? And then also the tail end of the question was, are you looking to acquire more mines?
So we're sort of up in the Sierra Madre mountain trend. And if you look at the red corridor, the red dashed lines outline a corridor where there's several mines. Each one of these pickaxes that you see on the screen, that's a mine. So this is elephant country. It's a great place to be doing exploration, and many successful mines operate in this corridor. And as I mentioned, Durango State is a mining-friendly state. Mining infrastructure, mining culture. So the workers understand mining. They've been doing it for almost 500 years here. And so that works out really well. Are we looking to acquire more mines? I think we'll do just about anything that will benefit our shareholders. So that's the lens that we look at these things from. If we can make money for our shareholders, we'll consider it very strongly. Right now, we're focused though on putting La Parrilla into cash flow. And then we already have San Diego, so we'll look to see how to advance San Diego.
Very good. What are your plans to allocate capital between La Parrilla, La Parrilla's rehab, San Diego exploration, and potential M&A?
Great question. So the focus, again, will be to put La Parrilla into cash flow. So the money we've raised will all be allocated towards getting La Parrilla into cash flow. And any extra we will keep in reserve just in case there's any contingencies at La Parrilla that we have to deal with. Once La Parrilla is in cash flow, other things being equal, then we will look at how we can create more value for our shareholders through doing work at San Diego. At current prices, if I go to a slide back here, when First Majestic operated it, they produced about 3.5 million ounces on average per year. I'm looking at the far right, and we'll produce about 2.7 to 3 million ounces a year. Their C1 costs were below $10. Our all-in costs will be in the $20 range. So at current silver prices, producing, for ease of numbers, let's say we're producing 3 million ounces, and let's say that our free cash flow is $15 an ounce, just for round numbers, that's below current prices. That's $45 million a year. So once we're up and going, we'll be generating significant cash flow, all other things being equal. So we'll have money to do more work at San Diego and other value-enhancing strategies as we go forward.
Question about exploration expenses and expiration of licenses. I guess that's referring to maybe permitting.
Okay, so good question. Our La Paria mine is fully permanent, so we you know there's really nothing that needs to be done there in terms of exploration. We explored at La Paria from 2023 August all the way till last fall. Mind you, all of that drilling was underground, so there's no problem with us continuing to explore there.
I think the issue is more specifically about like exploration costs. So like maybe per meter costs, things like that. Access to
Okay.
site, access to labor.
We're discovering ounces at La Paria for about 22 cents an ounce. And if we fully load that cost, it's less than 50 cents per ounce to discover an ounce of silver. So it's wildly profitable. But you got to remember that even at that level of profitability, it's not cash in your bank account. It's metal in the ground. So you got to turn that cash. You got to turn those ounces into cash, and the only way you can do that is either selling the company or putting the asset into production and generating cash flow. So for us, going into production next year, we'll be generating cash flow. And then somebody asked a question about historical or drilling assay data.
Oh, you can see it. You can see, very good, very good.
With historical estimates.
Yeah, I think the question is a little bit more bigger picture. Is there some 43-101 in the picture? Maybe it could be at the other property, but not La Paria. La Paria is, yeah.
So there is a 43-101 on both properties. The one in San Diego is from 2013. And so that's the one. If you want to look at something, it's 12 years old. The focus of the company being La Paria, that's the 43-101 that SRK just put out in March. I believe it was March 24 or somewhere around there of this year. So there's already a new 43-101 on La Paria. If anybody's interested in looking at it, it's available on CDAR and I believe also on our website.
Very good. We have had a lot of questions beyond that. I will forward them to you, Greg. Thank you for your time. Can you just please close out with how people can get in touch with you? And yeah, thank you again.
So happy to get questions from folks or have one-on-ones. You can reach out at info@silverstorm.ca, or you can reach out directly to me at greg.mckenzie, McKenzie, @silverstorm.ca, and just put in your question where we met or what conference you attended and your question, and I'm happy to respond to as many people as I can.
Very good. Appreciate it, Greg. Hello again, everyone. Thank you for coming. Next company is Midnight Sun Mining. Speaker is Adrian O'Brien, Vice President of Communications and Corporate Development. Midnight Sun Mining is traded on the TSXV under the ticker MMA.V and on the OTC under the ticker MDNGF.
This is Midnight Sun. Of course, we are working in the Zambian Congo copper belt. So this is pretty well the top spot on the planet right now for copper exploration. Super interesting place to be. There's a lot going on. I'm going to try and cover all of it for you in about 20 minutes today. So we'll try and pack in everything we can and leave lots of room for questions. But I want to really attack this from a thematic standpoint. So right off the bat, let's cover a few key points about this project that you're going to want to hold on to as you look at this through the lens I'm going to present it in. Right off the top global hotspot for copper today. There is only one place on the planet that breeds billion-ton deposits as an average. that are stratabound, meaning they are shallow and high grade, and that is the Zambia-Congo Copper Belt. So we are located right smack in the middle of the belt. We've been there for 14 years. It is your typical 13-year overnight success story. We are at the critical juncture now where we're moving these projects from early discovery into development. So this is the most exciting phase the company's ever had. When you look at the area I'm going to show you on a map in a moment, you'll notice we're completely surrounded by majors. Every big player in the copper space is in this belt. We are quite literally surrounded by the 5 biggest copper mines in Africa. And when you're looking at Midnight Sun's project, there's 2 different ways to look at it, and there's 2 different attack plans that are underway. One is for large sulfide targets. So when we're talking about sulfide deposits or stratabound deposits, these are the billion-ton deposits that the Domes region is known for. Secondarily, we have oxide copper on our property, and of course the oxide copper is the very surface portion of a sulfide deposit that's been oxidized and weathered. We've got a lot of that on our property, and we're working to get that into production in conjunction under a technical alliance that we call a cooperative exploration plan with First Quantum. Their Kansanshi mine, which is their flagship, is just 6 kilometers away from us to the east, and Barrick's flagship Lumwana mine is only about 20 kilometers west. So we do have certainly the right players around us. And when you're looking at the geological setting, I mentioned already, this is unique. This is a global hotspot because of the size and scale of the deposits that this area breeds. But we are right in the thick of it. And we cover some of the most prospective ground and have actually the best target for exploration in Zambia right now, which is called Dumbwa. So as we move forward, I'm going to show you all of these things hand in hand. But keep in mind, timing is everything here. And what you're seeing in the copper space right now is the absolute precipice of a large disconnect between new projects that are in the development pipeline, new projects coming on stream, and this major global copper deficit that is expected to hit within the next decade. And if the projections are correct, it's going to be very significant. And right now, there is no answer to how that'll be solved, but we're hoping to do it here in Zambia. So quick snapshot on Zambia for anybody that's never been there, that's never seen the district before, isn't familiar. You're looking at an area that 75% of their export earnings are copper. It is completely mining centric. Of course, it is a very easy jurisdiction with a long history of mining, over 100 years as being a major powerhouse in the global mining sector. But if you look at Zambia from a global output circumstance, they are at about number 7 or 8 in the world right now for global copper output. And their president, HH, has come in with a plan to move them to number 2 or 3 in the world. And so that plays a big part in what's happening around us, and hopefully Midnight Sun plays a big part in that as well. So let me give you a snapshot of what the actual district looks like. And what you're seeing here is a view of both the DRC, which is north of us, and Zambia itself, and the Zambia-Congo Copper Belt straddles that border. So if you're on the DRC side, you can expect to give up a vast percentage of your property simply to move it forward, and jurisdictional risk beyond what most of us are willing to deal with. Down south in Zambia, very easy jurisdiction, 100% mining friendly, democratically elected government in place, proper mining act in place, and we own 100% of our projects with no royalties or encumbrances. So that is the kind of area where you want to be working. What you see here, of course, the Zambia-Congo Copper Belt on the right-hand side of the screen, and then this area with all the bubbles in the middle, that is the Domes region. It's about 200 kilometers wide, meaning east to west, and about 200 kilometers north to south. And all of those projects, with exception of Tenke, every project you see in front of you is over 1 billion tons. In most jurisdictions, that is the outlier. That's the rarity to find a 1 billion ton deposit. In the Domes region, it's the average. So these are very large deposits and a very special jurisdiction for that reason. So you see, of course, Barrick's Lumwana mine, 1.62 billion tons at 0.52. I'm going to expand on that in a moment. First Quantum Sentinel mine, 1 billion tons at 0.51. Ivanhoe's Kamoa-Kakula, an absolute monster, 1.4 billion at 3% copper. And of course, Kansanshi, First Quantum's flagship, they're right next door to us, and that's 1 billion tons at 0.66. Now, what you don't see on this map are all the players that are here that are looking for copper projects they can put into production. These are just the producers. You would see, if I had all the names on there, Anglo American, Glencore, BHP, Freeport-McMoRan, and of course, Ivanhoe just cut a deal for 8,000 square kilometers of land inside Zambia, and they're now focusing their exploration efforts inside the Zambian borders. And of course, Rio Tinto just took out 6,000 square kilometers, both in conjunction with the Zambian government, working together to outline new areas. So this is a super exciting scenario that's unfolding, and we're right in the middle of it. Everything you see surrounded in green is Midnight Sun, our flagship project, Solwezi, and a brand new project we announced a few weeks ago called Liswishi, which I'll touch on very briefly. But essentially, we acquired Liswishi. It's a very, very geologically data-rich project. There's been about $4 million in work done on it. We have all of those results and all of that data. It is a project that's in our pipeline to work on, but right now we're focused on what you see in front of you, and that is Solwezi. So now we're zooming in on just the Zambian side of the border. This hatched line running across is the new Lobito corridor. That's a rail corridor that is being backed by the US government and, of course, majors such as Ivanhoe. And that rail line will connect every major mine in the domes with a western port. Of course, you'll see on here and on that last map, it runs right through the middle of our property. So that is certainly a bonus for anybody looking to acquire this. So we are right in the middle here. And what makes our property different from anybody else is how it's broken up. You'll notice it looks like a bit of a quilt here. We've got 4 different blocks. Each of those blocks is a target for one of these billion-ton systems. Because of the underlying basement domes, hence the domes region, each of these major mines has 1 dome under it. Our property has 4. So because we have multiple domes, we have multiple systems, and therefore we have multiple opportunities to explore different systems, each with that same overall possibility for a discovery. On top of that, we have 2 areas here, Kaziba and Me Too, in the northwest and southwest corners of our property. Those areas have oxide copper, and that's where we're working with First Quantum to hopefully deliver material to the Kansanshi mine. So I'm going to blast forward here through a couple of things, but I want you to hang on to these 3 items. Remember, billion-ton deposits, the fact that they're high grade, 0.56 is the average, and they are very shallow. These are stratabound deposits. So you're looking at something that is flat lying and basically less than 150 meters from surface. So these are not the porphyry deposits you hear about all the time that come with a $5 to $10 billion capex. These are shallow, these are giant, and they are high grade. So this is an area where if you find it, you're going to be able to build it, and that's the key. So looking at this, we have 3 systems I'm going to talk about here. Dumbwa, which is our flagship target on the southwest corner of our property, Kaziba, which is in the northwest corner of our property, and Me Too, which is in the southwest corner. Each of those already have major discoveries, and I'll show you how we're pushing them ahead. But before I do, I want to cover one part of our story briefly, but it's a background that you need to understand and really gives you the ultimate stamp of approval for what we're doing and why we're out there doing it. So Lumwana, which of course is Barrick's flagship project, sits 20 kilometers to the west of us. And the history of Barrick's Lumwana mine is this. It was purchased from Equinox 20 years ago for $7.3 billion. That acquisition was very extreme 20 years ago. It's extreme even by today's standards. But Barrick paid $7.3 billion for this. And when they did, it was only an 800 or 900 million ton deposit. They worked on it for 15 years. They weren't able to get this thing to work. It didn't have continuity. They had some uranium contamination. They were struggling with this asset. And 5 years ago, or 4 years ago, I should say, they decided to bring in an expert to solve that issue. And that expert was a PhD geologist named Kevin Bonnell. Kevin had more deposits to his credit than anybody else in the belt. And they brought Kevin in with an express mandate. And that mandate was this: turn our system into a tier 1. We don't want a tier 2. We want a tier 1. We need at least 5 million pounds of contained copper, or 5 million tons of contained copper. We need to move this ahead. So Kevin came in, he took a look at it, he built a team, they put together a strategy, and in 24 months, which in our world is extremely fast, Kevin delivered 1.62 billion tons of ore, 62 years of mine life, and almost 9 million tons of contained copper. He gave Barrick the tier 1 asset they were looking for. He gave them a project that's going into production on the basis of a brand new super pit. The feasibility study alone is $150 million. That's underway now. And following that, the key part of the story is this. Kevin wrote a report to Mark Bristow, to Barrick's management, and said, look, if you believe in what we just did at Lumwana, there's another asset you need to look at. It's called Dumbwa, and it's owned by Midnight Sun. And that brought them to the table. Now, we did not end up putting a deal together with Barrick. what we did do is we brought in Kevin Bonnell. So Kevin actually left his job at Barrick. He joined Midnight Sun shortly after. And his thesis is that Dumbwa, the target I'm about to show you, is as big or bigger and higher grade than Lumwana, and I'll show you why. So this is Kevin's phased approach. If you look at the way Kevin approached this versus the way that historically people approach these large copper systems, he took one step that no one else did, and it's that central step there, phase 2, dipole-dipole IP. It is absolutely critical in defining these structures around the large geochem anomalies that typically define them and getting them to a point where you can drill them systematically without wasting money, wasting holes, being methodical and cost effective. And so this was the methodology that Kevin used at Lumwana that took them in 24 months to a tier 1 asset. We're following the exact same approach. First, you're looking for a large geochem anomaly at surface, which we certainly have at our properties. Then we're looking for that dipole-dipole AP confirmation of the mineralization and the correlation between the geochem and the IP results. And number 3 is to get out there and drill these systematically top to bottom. So Dumbwa, Kaziba, and Mitu, 3 big sulfide targets. Here we go. I'll show you what they look like. This is Dumbwa, and this is our flagship. So what you're looking at on the right-hand side here, this large purple blob, that is a 20-kilometer long soil anomaly that runs up to 0.73% copper. Now, you remember I mentioned 0.56 as an average of the mines in the region. This is 0.73 in soil at surface. So that is certainly a jarring first sort of pass at what might be lying below. Now, if you look at that on a larger scale, we see 20 kilometers of strike length, and correlating that, we see something called a vegetation kill zone. And that is something that's typical in most of the big deposits in the belt. And what it means is when there's a lot of copper in soil, it becomes toxic to vegetation, and you'll see that trees, grass, plants can't grow there. So you end up with these large areas that are barren, and that's exactly what we have at Dumbwa. So this is the largest and highest grade soil anomaly on record in Zambia to date. And over top of that, we have these large kill zones that are very, very obvious. You can see them on Google Earth. And then to correlate the sulfides, we've got lots of drill results. Every one of these intercepts is economic, and they're showing you some pretty key things. Give you 2 quick examples. SDDD06, 13.5 meters of 0.77. That starts right at surface in sulfides in bedrock. So what that means is this system isn't just shallow, it actually daylights. It comes right to surface. And also, if you look at SDDD03B, 11 meters of 0.5 and 33 of 0.44. That means we have multiple layers in this system. That's something they had at Lumwana, and it adds to the Dumbwa and Lumwana analog that we're working on here. So jumping forward, one last thing here. Best hole was drilled just off the south tip of the anomaly on our property, and that was actually 15 meters of around 5% copper. It was drilled by a major a couple years ago, kind of lit the area up and got everybody excited. So if you look at this, and of course this deck will go out afterwards, but everybody can take a look at it on our website if you like. What I'm trying to show you here is just simply that if you take a list, a checklist, if you will, of each of the key criteria and characteristics of one of these major systems, in this case, Lumwana, put Dumbwa beside it, it is identical on every single level. There's no difference. The belt itself, typically the copper is held outside of the basement domes, but there's 2 big systems that are in the basement domes, and they are Lumwana and Kamoa-Kakula. In our case, there's a third, and it's Dumbwa, but it's the only one of the 3 that has not been drilled off yet. So we're taking Kevin's approach, and here it is. We just put these out a couple of weeks ago. This is the IP survey, the dipole-dipole IP survey. You'll notice 56 line kilometers, these black lines over here. This yellow circle is the area that we've just completed and announced. It's the southern 60, relatively around 60%. It's about 11.5 kilometers of strike length. We've still got another 7 or 8 kilometers to go. And what did we get from that IP survey? We got confirmation. This is the high chargeability and low resistivity. And what this is showing you is 11.5 kilometers of mineralization. This is what Dumbwa looks like. And it's the very first time that we have a clear, cohesive picture of the mineralization connecting that geochem at surface. And now we have a roadmap to systematically drill off this system. So what we see here is a couple of things that surprised us. Number 1, the depth. We've got this down to 300 meters. The geometry of this is extraordinary. 11.5 kilometers long, 300 meters deep. The other thing that we have from that IP survey is there are a number of east-west faults that explain historic drilling on hits, historic drilling on misses. And that's just as important as the individual drill results themselves. We need to understand the system. We need to understand the shape, the size, and the geometry. And this gives us the data we were missing. So we can see the dip direction. We now know what angle it's sitting at. We can see where there's folding. We can see where there's pinching and swelling. And we have a good, solid, cohesive picture. So we are very, very quickly going to start drilling at Dumbwa. We're kicking off a large-scale program that is going to explore this entire 11.5 kilometers. And shortly thereafter, we'll complete the rest of the IP survey and do follow-up drilling over it. So this is the start of actually going out and systematically proving out this incredible geochem anomaly that makes up our Tier 1 target. So there's two other areas that we're working on sulfides. I'm going to cover them very, very quickly for you. Kaziba is number one. This is a 4 by 2 kilometer sulfide target. We just drilled 4 holes and assays are pending. It looks basically like this. We drilled 4 holes up here. The plan is to drill 8. We're going to wait till the assays come in, and there's a reason why. Rather than sitting here and waiting for 8 weeks, we moved that drill rig down to Dumbwa so that we can kick off with 2 drill rigs at Dumbwa, which is going to be much, much better. And then we have Me2. Me2 is the southwest corner of our property, and we drilled 2 areas down here. Historically, we have 11.5 meters of 3.5% copper and 11.5 meters of 1.5% copper, both fantastic intercepts. We know that those sit below a large oxide blanket. So we've done exactly what Kevin prescribed. We've gone back and started at square one, sampling first. Let's get the geochem ironed out. And we took somewhere between 1,800 and 2,000 samples over that area. Those are awaiting assay right now. Once we get those back, that'll dictate follow-up dipole IP, and then we go and drill in 2026. So there's the plan for Dumbwa, Kaziba, and Me2, 3 major targets for one of these sulfide discoveries. And taking that a step further, this is the oxide copper plan that we have underway. And this really is the piece that differentiates Midnight Sun from almost any junior out there, is that we have large-scale exploration upside mixed with the tangibility of actually having a near-term production scenario in our hands that we're trying to move forward on. So this could be a very, very exciting situation for us. And I'll explain very quickly how it works. First Quantum's Kansanshi mine is 6 kilometers to the east of us. You'll see their haul road running right through our property here. And this, of course, is Kaziba. So this is the area we've been working on oxides. Kansanshi has 3 circuits. They have a sulfide circuit, a mixed ore circuit, and an SXEW oxide copper circuit. That's a circuit that is specific to this oxide copper, and it's because the metallurgy is different, so you need to approach it differently. They also have a smelter on site, and their smelter is one of the most efficient on the planet. So the smelter throws off about 1.5 million tons of sulfuric acid a year as a byproduct, and that needs to be neutralized. You are not allowed to ship that out of country. You can't truck it. You need to come up with a way to deal with it in situ. So First Quantum was brilliant. They decided to heat bleach copper oxides, which are rich in malachite, and the malachite neutralizes the acid. So they end up with water as a byproduct from that process and cathode copper. Cathode copper is what is left behind from the oxides. They sell that product and they make about 400 million a year in that process. So this is the economic engine of the Kansanshi mine. Now, that has been the case for about 20 years. Kansanshi's been working that way beautifully. But they are getting very low on oxides now, if not depleted. So we're working together. We have this plan in place. It is non-binding. This is a cooperative exploration plan. So essentially a strong technical alliance where we know we have oxides, they know we have oxides, they need oxides, we want to have a mining deal. So we're working together. They've given us an engineering team. They're helping us with assays and metallurgy at the mine, at their lab, and expediting this entire process, which is a really unique position to be in. So as we move forward, it's our responsibility to do the drilling. So we did our first round of drilling. This is what we came up with. 21 meters of 10.69% copper, 26 meters of 5.6% copper, 15 meters of 3% copper, 7 meters of 4.6. Feel free to read the rest of those numbers. This stuff is spectacular. It's high grade and it is right at surface. So this is now defined as what we call an oxidized blanket or a mobilized blanket of oxides. It's oxide material that was mobilized most likely by drainage, settled in big pockets. and it has turned out to be both much higher grade and much larger than we expected. So the area that I just flagged those results from is this pink blob up here on this graphic I'm showing you. The area that we did that work was based on about 39 drill holes. Those 39 drill holes look roughly like this. We ended up with a fairly large high-grade area here, and we've now drilled out the initial constraints and realized that we've only drilled about 40% of the target area. So we've just launched a new drill program. It is underway as we speak, and this is going to be about 160 holes to define the extents of this oxide blanket, after which we are going to publish a 43-101 compliant maiden resource. The goal then will be to get a deal together with First Quantum and move this towards the production stage. If we do, that could mean very significant near-term cash flow for Midnight Sun and solving First Quantum's issues for a very long time. The other thing that we found in our partial ionic leach survey, which was the initial graphic I was showing you here, are these 4 new areas of oxides. So we're going to test those with some additional partial ionic leach and then a follow-up drill program that will follow the 160 holes we're doing here. These are vertical RC holes, so very quick and very, very fast and easy and cheap to do. So we're going to get through those very quickly. Give you a quick snapshot on the company here before I hand the reins back to Jimmy. Looking at Midnight Sun today, we're at about $100 to $112 million market cap. Our peak this year was $151 million. If you look back to the start of this process, we were about a $27 million company. So we've come a long way. We're a TSX top 50 company. Our trajectory this year has been incredible, 20 cents to 91. We raised 10 million. We just brought in another 2.25 through warrants. So we're sitting on about 12 million, 11.5 to 12 million. And we brought in about 22 or so percent, 20% we'll call it, of institutional holders. So we've really built this out and built an ultimate platform now to unleash this big exploration program on all fronts and really kick this into high gear. So with that, Jimmy, questions?
Very good, very good. I know it's a lot to pack in.
It is.
So first question is the one that's posted here. Any impact from Trump's tariffs? Very general, broad.
Impact on our share price. I think it impacted just about every junior on, certainly on my screen. Every copper company out there from major to junior got hammered when those came out. But at the end of the day, does it have a large impact on our project? Not really. The fundamentals haven't changed, and that's what people need to keep in mind. This is an area that is literally the top spot for people to be looking for large copper systems. It is the area that is most likely to be a new supply region. There are just no copper projects in the pipeline coming on stream, and certainly none that have good economics or that are comparable to the projects in this region. So the big picture for us, does the copper deficit go away? Not a chance. Does the copper price hold up? I absolutely believe it will. And are we in the right spot to be able to be a part of that? We absolutely are.
The next question is about KPIs that the majors might be looking for to maybe have a real M&A event.
That's a really good question. Now, going back to that very first map that I showed, and I'll actually just bring it up on the screen because it helps people to kind of visualize. If you're looking at First Quantum, you're looking at Ivanhoe, you're looking at Anglo and Barrick and the other companies that are in this region. There is only 4 companies on the screen right now that actually have a producing mine in the region. And they are First Quantum, Barrick, Ivanhoe, and China Molybdenum. But I mentioned Glencore, Anglo American, BHP. All of those companies are in the area sniffing around. They're all interested. They're all looking for something that could go into production. And certainly Ivanhoe only has exploration ground. They do not have a production level asset right now. So if you think about it this way, do you want to go out into a new area and look for something completely grassroots if you're a major? Or if a company comes out with something really outstanding in exactly the right spot, close to a major, we know 1 billion tons is the cutoff for companies like BHP. That's typically what they're looking for. They want that critical scale. If you look at Dumbo as an example, our target there is 1 billion plus tons. It's the kind of system that could host that type of deposit. And when you're looking at what those companies want and what they're out there looking for, it's exactly that. Development stage projects that show that they have the goods, they're going to have the size and scale that they want, and it's a turnkey opportunity for them to come into this region and open a new mine or supply feed to one of the nearby mines. So, in terms of what are you looking for, you want to be in the right place you want to be in the right kind of size and scale, and you want to have multiple opportunities, and we cover that in spades. So if you're looking at this region from an M&A perspective, this is a perfect storm. The whole region is a perfect storm. But the only company that's moving from early discovery into development right now is Midnight Sun. So as we march forward and drill these assets, we're moving from that early stage discovery into building these out and showing how big they can be, and hopefully hitting those numbers and that critical scale that these companies need in order to want to make an acquisition. And make no mistake, that is our goal. We're not a mining company on our own, so the goal is to get this to the point where we can sell it.
We are out of time, so I'll thank you, Adrian, for gracing us with your presence again. I know you're very busy. You're heading back to Zambia very shortly. I'll just kick it back over to you for about maybe 15, 20 seconds. How can people reach you if they're interested? And yeah, investor relations, all that.
Yeah, absolutely. This deck will be available on our website, actually a more fulsome version of it with more data. So you can go to our website, midnightsunmining.com, and grab that. You can drop me a line at Adrian, ADRIAN, at midnightsunmining.com anytime you like. I'll be more than happy to respond to any questions. Or you can pick up the phone and give me a call, 604-809-6890. And happy to take the calls and happy to talk to anybody anytime about what we're doing. One morning, I'm on the road the next couple of weeks, so it's going to be a little trickier with the time zone in Africa. But other than that, please feel free. We're always happy to respond directly.
Very good. Thank you again.
You bet. Thanks, Jimmy.
I'm about to present to you CEO of Astra Exploration. Astra Exploration is traded on the OTC under the ticker ATEPF and on the TSXV under the ticker ASTR.V. We will have Brian Miller, CEO, join us momentarily.
Appreciate everybody joining today. Thank you. My name is Brian Miller, CEO, Director, and Co-founder of Astra Exploration. Some of you may have heard of us. Some of you, this will be an introduction. I won't get into too many details on some of the stuff. I apologize on the time front, but we've got about less than 20 minutes to cover a lot of ground here. But we are a company that's relatively new. It was co-founded by myself and 4 others about 5 years ago, and we're focused primarily on gold and silver in Latin America. Standard cautionary statement. I don't have time to go through the team in much detail right now, but I do encourage you to go to the website and have a look at our PowerPoint and see some of the people who are involved with this company, what they've done in the past, the discoveries they've made, the values they've created for their shareholders, and some of the successful exits that they've had. This is a group that's very well experienced in Latin America with these types of deposits, particularly in Argentina and Chile, where we're going to be focusing on. Right here are some of my co-founders that started the company with me about 5 years ago. But just quickly, you'll see, for instance, Darcy Marud, spectacular career, led one of the team that discovered El Peñón deposit in northern Chile, as well as discovered the Mercedes mine in Mexico, and helped build the Cerro Moro mine in Argentina, which is a place we're going to be talking about today. Charles Funk, CEO at Heliostar, also involved with Vizsla Silver, where he was the VP Exploration when they discovered the Napoleon at Panuco. And then here on the management level, Roberto Alarcon, who also worked at Yamana with Darcy for many years. He was in-house counsel for Yamana, and prior to that, Homestake. He's Argentinian or a Chilean lawyer based in Santiago. And our head of exploration, Diego Guido, who is Argentinian based in Buenos Aires, a globally recognized epithermal expert, and also particularly sought out for his expertise in the Deseado Massif. And he also discovered the Pinguino deposit in Santa Cruz, which is the jurisdiction which we're active in. Very quickly here on the capital structure point, this is, I think, one of the most important points of the company, aside of the team and the assets. We have a very solid capital structure, tightly held, closely owned by a small group of individuals, and have a spectacular roster of shareholders. Michael Gentile is our largest shareholder, currently owns about, I think, 17%. Some of the other names, Peter Maroney, Mason Resources, Simon Marcotte, the guys at Agentis Capital, So these are people who are very active in the space. The Mason Resources is a group out of Toronto. That's Simon Marcotte, Peter Damouni, Fahad El-Tamimi, Victor Cantori, that group. And then management and directors, we own about 15%. So collectively, among those people that I mentioned there, give me a list of 24 names, and that accounts for about 80% ownership. So very closely held. About 100 million shares issued and outstanding, 115 fully diluted. A market cap of, we're closer to about 40 million right now, and cash on hand. This was our June position. We're closer to $1.5 million right now, what we have left in the treasury. So we have enough to fund the second program, drill program coming up here in the next 4 to 6 weeks, and enough funds to get us into 2026. In the portfolio right now, it consists of 3 projects, 2 in northern Chile, that's Pampa Paciencia and Cerro Bio, and 1 in Argentina, La Manchuria. We're going to be talking about La Manchuria today because that is where we recently released the drill results from the gold silver project, and where we will be drilling here in this upcoming drill campaign. Not that Pampa Paciencia and Cerro Bio aren't important. There's a lot of deep value. Those are very solid projects. Pampa Paciencia, notably, again, a large epithermal gold silver system, but also has a very attractive copper target, and it's just adjacent to the Spence and Sierra Gorda copper mines. But talking about Argentina here, and I apologize, I'll be looking up at a different screen as I'm going through this, but we're talking about the province of Santa Cruz, which is historically one of the most mining-friendly jurisdictions in Argentina. It's host to several past producing as well as currently producing mines, including world-class projects like Cerro Negro to the north, Cerro Vanguardia to the east, and then Cerro Moro further to the east yet. The province leads Argentina in gold and silver production, accounting for almost 60%. And of course, the new political regime in Argentina has been very favorable towards business in general, but mining in particular, and is attracting a lot of investment capital into the space. And just quickly, the Deseado Massif, this region that we're talking about, it's a geological region that is perhaps the most well-endowed region in the world for epithermal gold silver. It's a relatively young exploration region that really hadn't been explored until starting in the 90s with the discovery of Cerro Vanguardia and some M&A activity that peaked in the last gold cycle in 2012. Notably, Yamana buying the Cerro Moro deposit for about $413 million, and Goldcorp, previous to that, buying Andean Resources for the Cerro Negro deposit for $3.4 billion. That was kind of the culmination of the last cycle, and there hasn't been much investment since then due to the political situation there, which I mentioned has changed, and we're seeing a major influx of investment into the region. Going to the project itself now, the blue outline here, this is the project that we're talking about. Notably, there's this pink outline here. I'll get to that in a moment, but it's a good sized land package, about 5,600 hectares. The previous exploration has solely focused on this small blue, dark blue circle in the center. There is a small resource there that was drilled out. It's a near surface resource. The previous explorers were focused on a near surface oxide resource, so they only drilled this shallowly, and they didn't really go after the high-grade feeder zones. And so that's our approach to this. Some of these feeder zones had some spectacular grades. They were open at depth and along strike. And so that's the approach that we're taking to this. The deal we got on this, it took us 13 months to get this done, but we signed a deal. We've got an option. We can earn up to 90% interest. The first 80% we earned by spending $3 million in exploration. There's no cash payments, no share payments. And by the 6th year, we can elect to purchase an additional 10% for a $5 million cash payment. So very attractive deal terms for a very solid project. I mentioned this pink outline here. This is important. This outlines a basalt flow unit that took place after the deposit was in place. And so a lot of this is actually covered by this basalt flow unit. So we'll get into some of that in some more detail in some of these slides. But these are some of the previous results of drilling from past exploration. And these are the kind of results that we're talking about. They truly are spectacular grades. This is a narrow vein system. So most of the veins you're seeing at the thickest, they get about 2 meters. But the density of these veins is hard to overstate. The entire area, all these little red lines you see on the map, these are all veins or veinlets that have been mapped at surface. And so oftentimes you'll get these 2 meter wide veins, but there'll be several parallel structures. And that gives you some exceptional widths in some cases, like this one, 20 meters at 10-gram gold and 800 grams silver. But otherwise, in the individual veins, you're talking 1.6 meters at 257 grams per ton gold and over 4,200 grams of silver. 4 meters at 26 grams gold and over 3,100 grams of silver. 2 meters at 52 grams gold and over 3,200 grams of silver. So very, very high grades, both in gold and silver. And these aren't one-off, as you can see from the table here. There's several historical intervals that are very, very high grade. But our interpretation from this, with this from the beginning, was that this thing was still open in several directions, notably along strike, also parallel and at depth. And the eastern zone, which had seen far less exploration relatively, I think only had 5 or 7 holes in it, and or 5 to 8 holes in it. And I think 5 of those intersected greater than 5-gram gold equivalent or 8-gram gold equivalent. So this thing had a lot of opportunity in several directions. Notably here, where I've put this 20 meters at 10-gram gold, this is one of the best intervals. Previous modeling had interpreted this system to be cut off to the southeast. So the interpretation was that there was nothing remaining to the southeast for exploration. But our first drill program disproved that theory. And I won't get into the geology weeds too much, but there is some things that are important to understand for really wrapping your head around the potential of this thing. So this is a cross section from the north end of the main zone. So this dashed line in the inset picture here, this is far north in the main zone. And this is if you're not familiar with cross section, picture slicing the end off a loaf of bread and then looking at the end of the bread. And that's kind of what we're looking at right here. But there's kind of 3 units here. This pink unit, this is the rhyolitic tuff, and this is the most favorable host rock. This is where you find veins with grade. And you also find that in the pyroclastic sequence beneath that. This is another good host rock. And beneath that, in the andesites, this green area, you find veins, but they don't have grade, typically. And there's some important detail we'll get into there more. But this yellow unit right here that's labeled a post-mineral breccia, this was something Diego identified very early on. This had previously been identified as a host rock, and so they were expecting to find veins in here. But when in fact this unit occurred after the veins were in place, so you're not going to find veins. When you move further to the southeast, this is another cross-section from further south, you see that this post-mineral breccia gets thicker. Well, they drilled these holes in here expecting to find vein, and they didn't. There was not even, it wasn't just no grades, but there weren't any veins. There's also some cross-cutting faulting across these veins. So the conclusion was that this system must have been faulted off, and therefore the veins were no longer continuing to the southeast. Our first drill program proved that to be wrong, which is a very exciting development. That was one of the most important drill targets. So we'll get into some of what the goals with the phase 1 drilling was. It was 2,500 meters in 11 holes of diamond drilling. And the primary goals of that was to extend the primary mineralized veins that plunged underneath the volcanics, that post-mineral breccia that I talked about. So we did confirm that. Also, what's interesting, I mentioned how that post-mineral breccia was getting thicker as we moved to the southeast. That now, as we step out further to the southeast, appears to be getting thinner again. That's important because that means that the rhyolitic layer, the favorable host rock, is again getting thicker to the southeast and the system is opening up. So that's quite exciting. The discovery of additional host rock units at depth. This was something that was unforeseen. This was a very pleasant surprise. I'll get to in detail. But the big takeaway here was that for a very modest drill campaign and a model that was completely reconstructed and entirely conceptual, phase 1 drilling opened this thing up in every single direction. It opened this thing up laterally, it opened it up along strike and to depth. 4 target areas were the focus of this first program. Target area 1 was targeting these veins along strike to the southeast. This was what I was just talking about. Area 2, this had 2 functions. That was to test for parallel structures to the northeast, as well as test known structures at depth. Target area 3 was to test for parallel structures to the southwest, and area 4 was to drill a couple of holes in the eastern zone. target area 1, hole 107, this was a 75-meter step out from previous drilling. And this is where we did indeed intersect that primary structure at depth. We cut 1.6 meters at 75-gram gold and 87-gram silver. And then hole 110, this was a point of big concern a lot of people had. Hole 110 intersected veins, but they didn't have any grade. And this is really important, this next part, for understanding this. This isn't a concern. I mean, obviously we'd like to have grade in every hole, but we can explain why we didn't have grade in the holes. And actually hole 110 was an important part of understanding this post-mineral breccia, as well as 115. Those holes played some key roles in explaining some of the geology here. So what we're looking at right here is a long section. So this would be, the perspective would be as if you were, say, standing on the letter E, you're looking to the southwest. This long section is shown by this magenta line right here. And what you have are the 3 units, or 4 units, excuse me. This blue area here is that post-mineral breccia that I talked about. This pinkish zone, this is the rhyolitic tuff, the most favorable host rock that's got the high grades and veins. The yellow unit is the pyroclastic sequence, which is also a good host rock. And then the andesites beneath that in green, this is where you find vein but no grade. And you'll see that hole 107 here, we intersected the veins in the rhyolitic tuff and their high grades. Because this system is plunging to the southeast, we drilled hole 110 deep along the same strike as this was plunging, and we drilled into the andesites. It was too deep. So we missed the rhyolitic tuff, but we did find vein there, but no grade. And something that's interesting about hole 110 and 115 was they also showed that this post-mineral breccia is again getting thinner to the southeast. And this is also confirmed by the geophysics. You can see here, this is gradient IP showing resistivity. And this post-mineral breccia is outlined, it's highlighted very well in the survey. You can see this bright purple signature here, and you see that it's dissipating to the southeast. So this system, this blue unit appears to be getting thinner to the southeast. The rhyolitic tuff seems to be opening up, and we did indeed confirm the extension of that system past what had previously been explored. So this opens us up potentially for hundreds of meters to the southeast. This is a very exciting development. Target area 2, this was to test laterally and some of the structures at depth. This intersected 4 new mineralized structures. All of these are open along strike and at depth, highlighted in hole 109 at 150 meters, highlighted by 4 meters at 3.7 grams gold and 81 grams of silver. Hole 108A, this was our headliner hole from the June 10th news release. This was our highest grade hole. This intersected a new vein, or actually a known vein at depth that we've named the Argentum vein, but this was highlighted by 4.4 meters at almost 12 grams gold and almost 2,800 grams silver. This is completely open at depth along strike, and it's also open above it. This was a fantastic drill hole, parallel structure that demonstrates continuity potential between the main zone and the eastern zone. And just to show a quick cross section, this is something that was part of Diego's thesis from the beginning, was that at surface you see all of these thin veinlets. They're narrow veinlets, but they're super high grade. The fertility of the system is just spectacular. But you'll see these narrow veinlets all over the place, and you can actually see at surface there is evidence in one case. You can actually see where the veinlets coalesce into a thicker vein in about 100 to 150 meter elevation change. And this is what we saw at Argentum here. You had near surface previous exploration intersected 2 meters at 2 gram gold and 300 grams silver, 80 meters beneath that, 4.4 meters at 11.8 gram gold and 2,800 grams silver. So spectacular development, open in all directions. I don't have a lot of time to go through things in detail here. Hole 105, this was a brand new structure. This was our biggest step out of 150 meters. This showed 3 new parallel structures, highlighted by 2 meters at almost 7 gram gold and almost 500 grams silver, right near surface, open in all directions. So that was a fantastic drill result. Hole 113, again, intersected new veins. This is northwest extension and or parallel vein structures to the west, highlighted by 1.3 meters at 17 grams gold and 61 grams silver, again at 63 meters beneath surface. Noteworthy to mention that hole 108A that I mentioned here, that's about 100 meters beneath surface, so it's quite shallow. Sorry, I'm running a bit short on time here, so I'll move through these quickly so I can wrap this up. Hole 112, this again, the eastern zone had seen far less exploration. We did drill one hole underneath the previous high-grade hole. We did intersect new parallel structures here, and we also intersected, highlighted by 3 meters and almost 4-gram gold and 25-gram silver, as well as parallel structures on the way to that 4 meters at 7.6 grams gold and just a trace of silver. And again, all of these are open to depth and along strike. Hole 114, there was no significant grade here, but this was drilled right into the andesite rocks, this veins was, and this hole actually drilled through the andesites. We thought that the andesites were one big host rock, basement rock, and there was no potential beneath that. But what we see, we drilled hole 114 and we were back into a pyroclastic sequence, which is a good host rock. Hole 110 also drilled through the andesites and got into another rhyolitic tuff. So this is a brand new dimension of opportunity at depth that we didn't know about. This was a very pleasant surprise. But the general model is like a Christmas tree laccolith. So you have that the andesites that spread out like sills. So you have host rock sandwiched between them. So just to recap here, now where we're at, the next steps for this, the company's funded into 2026, and that includes provisions for the next phase of drilling, which is another program of about 2,500 meters that we will commence just as soon as the weather clears. It's a weather dependent, so we're looking about 4 to 6 weeks. Multiple high quality targets produced by phase one. There are also several regional targets on this property that have never been looked at outside of the main and eastern zone. That's the big nugget here. That's the big blue sky potential. So we'll be looking to do some mapping in geophysics to work some of those up, to incorporate those into future drill programs. We've got a lot of institutional support, a lot of interest in the project. So quite happy with where we're at today and what the future looks like for this company. And with that, is there, Jimmy, are
Very
there
good.
any?
No, that was excellent. Thank
Okay,
you,
is it a
Brian.
live Q&A or?
Yeah, no, we're gonna do the Q&A. Can you see
Okay.
the button for Q&A on the bottom?
Yep.
Okay, so there's 2 questions there, and I have about 6 more here. So you want to begin with those?
Okay, and these are just for me that are here.
Yeah.
Um, Are we currently acquiring mines and how do we spend excess capital? Well, in the junior space right now, there is no such thing as excess capital. So, but are we acquiring mines? We are always looking for other opportunities. We've looked at projects. Diego's got a great Rolodex of projects. We have several that we are interested in. But yes, to answer your questions succinctly, yes, we're always looking for other projects. What carat of gold is mined from the deposit? So grade wise, I did go through some of the grades, obviously spectacular gold and silver grades. Average cost for exploration per gram of gold and silver. Can't say what it is for per gram of gold and silver. It's still early stage on that front. I can tell you that drilling wise, the cost of drilling has been about $330 US per meter. All in cost is what we had in this first program. So, very manageable costs.
All right, I got some questions that were submitted after your last in-person event that we can bring in. With phase 2 drilling at La Manchuria beginning soon, how are you prioritizing targets based on what you learned from phase 1, particularly with the discovery of feeder zones at depth?
More of a Diego question, but I think in my mind, hole 108A was one that I talked about. That was our highest grade hole. I think that has produced some spectacular step out drill targets. That thing, it's not only open along strike and at depth, but it's also open above it. So there's about 80 meters above that before you get into previous drilling. So that's got some spectacular step out targets. I think that the primary target is going to be along strike to the southeast. As I mentioned, that was a huge target and a big success. And that was our second news release. And interestingly enough, the share price went down on that. And I think, maybe the only time 200-gram gold is disappointing is after 8 kilograms of silver. But I think that's going to be a big part of the phase 2 drilling is to look for the extensions of that primary structure to the southeast.
How do you balance strategic access to capital while maintaining liquidity and broader market visibility?
Very carefully. It's and I don't mean that tongue in cheek. That is a daily um, a daily challenge. Our whenever we make a decision, management and directors own enough of this and they have enough money invested that every decision we make is based on dilution. So, how much dilution do we endure? How much value do we expect to potentially create for that dilution? So, that's the primary consideration with everything here. I think as far as market awareness, we do have some channels with our direct, with our investor group that offer us a lot of visibility for very low expenditure. And I think you have to be very cautious of where you spend your money in marketing because there's 1,000 other companies that are trying to make the same noise in the same space. So direct meetings, one-to-ones, low cost, high impact. And right now the story's getting a lot of traction. So and then as far as, add the component in of what money do you spend and where, as far as exploration, you also have to consider what the market appetite is right now. And right now, where I think we're at with La Manchuria, you've got a fantastic high-grade gold and silver. Those markets are performing quite well. We're starting to see the generalists show some interest in this. So I think that we're at a very early stage of something that's pretty exciting right now.
And then the last question here would be about funding. If you have drill success in the fall and there's increased market interest, how would you approach a new financing round, and would you?
The short answer is, would we? Yes. Obviously, we're a junior exploration company, so we'll always be raising money. That's just a necessary evil. Again, back to the primary consideration is what is the dilution and where does that dilution get us? So we're looking at several potential paths forward for this, and whether that's sole funding through the market, whether that's you have a strategic investor come in, either high net worth and or major, a producer. We are starting to see some of the interest from production companies. So there's several different ways that we can approach this. This is probably the most asked question that I've had in one-to-one meetings. And I just say that some of the hardest work that I've done and some of the most which is also the most valuable, is minding the capital structure and keeping this thing tight and keeping a solid share structure in long-term investor hands. And so I will be looking to do the same going forward. And I'm always cautious before I increase the public float. You can always expand that, but you can never bring it back. So the timing has to be right. And that has to be a combination of the corporate activities as well as the market interest. So I've told people that, cautiously, if they're interested in this, that the best place right now is the market, because I can't guarantee necessarily that, say the next financing opportunity, it may be very limited or non-existent as far as opportunity to the generalist. And right now, I'm quite pleased with how the shares have been trading. Very good consolidation. And I think that, where we're sitting right now and fully funded for the next round of drilling, I'm quite excited for where this thing can go.
So, yeah, with that, could you just give everyone a line about how they can reach out to you and or the company if they're interested? And thank you.
Absolutely. And thank you for having me, Jimmy. The best way to get in touch with this, there's the info at astra-exploration.com. You can go to our website. We do have a local phone number in Vancouver. And I like to think of myself as one of the most accessible CEOs in the business. If people reach out to me, I will respond, whether directly by email, leave me a voicemail on our corporate line. I absolutely will get back to you.
Very good. We appreciate it. And hopefully we'll see you soon, Brian.
All right. Thank you, Jimmy. I appreciate it.
The next company is Dryden Gold, traded on the OTC under the ticker DRYGF. and on the TSXV under the ticker DRY.V. I'm proud to present CEO Trey Wasser. Let's see if we can get him in here. Thank you for joining us, Trey.
Hey, thank you, Jimmy. Thanks for putting this on. I hope everybody's appreciating all your hard work and your excellent selection of companies.
No, I appreciate that, and I'm sure they will as well. Many people in attendance, I'm sure, are looking for an update to see where we're at, and others will be their first time. So I'll give you the floor and take it away.
Okay, great. Thanks everybody for tuning in. Looking forward to doing more of these with Jimmy and Trinity Financial. Had very successful dinner there last month in New York. Well, actually, it's in June, so 2 months ago. But let me jump right in because we don't have a lot of time, and we've got a big story here. So I want to
I think
sure
you'll have to
leave
reshare your
time.
screen.
Reshare.
Yeah, I think you just might have to reshare one more time.
Okay. How's that?
Yep, we're good.
Okay. And so, I want to unpack this thing as quickly as possible. But I like to start on this slide because I think it's very important in the junior mining space for you people who, maybe aren't as familiar with the junior exploration business in mining in Canada, where most of the companies are listed. I compare it a lot to the biotechnology companies in the US. Same kind of business model, no revenue, no income. So always dependent on raising money in the equity markets to continue to do testing in the case of biotech, and of course, exploration in the case of drilling. So for those of you who aren't as familiar with the mining and it's all about the management. Our board is made up of people all who have experience in building these small junior mining companies, basically from scratch, and building them up and realizing shareholder value, typically through M&A, selling out to a larger company. Not ever really, our goal is never really to go into production. We have a 2 to 3 year timeline to sell this company at a minimum 10x of what it's trading at today, based on what we find on our property. Like I said, everybody on the board has experience in that, and that's very important because two things. One, it ensures that we are able to raise capital, but it's also all people who have done it before. So we realize even though you can raise more capital, you have to treat every dollar like you may never raise another dollar. That on the technical side, we have a very good young team of geologists that have, for their tenure, have very good experience. Maura Kolb, our president and chief technical officer, runs our exploration program. Worked for Goldcorp for 8 years. 5 of those years, she ran the exploration program at the Red Lake mine, right in the area where we're operating. Anna Hicken was her number 2 there, and did all of her budgeting and everything. They ran a $50 million a year budget with 90 employees. So certainly capable of scaling this company up to be able to really have a growing exploration program. On the shareholder side, we're very proud of our who's who of shareholders, Eric Sprott, Rob McEwen, all the major funds, and also we've gotten the strategic investments from Centerra Gold, and also Alamos Gold is our largest shareholder. So we already have major producing companies that are involved in the stock that are just waiting for us to show the results, and are our partners already in this program. So the property itself sits in a very interesting area, very accessible. The Trans-Canada Highway runs right through our property, running from Winnipeg to Thunder Bay. And Highway 502 runs right down the through the middle of our property and down. So it's very accessible, gives us very low drilling costs, and just quite an anomaly is this property package we put together in an area that it has just seen very little modern exploration, even though it has incredible infrastructure. And that exploration has really been limited to very shallow exploration, very high grade gold here. But it, prior to us, it had never been mined more than 150, 200 meters, never seen a drill hole deeper than 250 meters. Where these Archean lode gold systems in this part of the world, the major ones here around us are still mining at plus or minus 2 kilometers. And most of these properties, the mines in these areas didn't even get really good and high grade like at Red Lake until they got down to 700 or 800 meters. So a lot of blue sky at depth in this property. The property itself is very large and very strategic. We're centered along this Manitou to Norwich deformation zone that you see in black here. We've got some east-west cross-cutting deformation structures that run through here. The main emphasis for us is where these intersections are, where the main deformation zone intersects with the east-west zone. We've got 50 kilometers of strike that is, you can see, plus or minus 2 kilometers on either side of this deformation zone. And, we're running a very modern and sophisticated exploration program coming out of their Goldcorp experience at Red Lake of, using all oriented core to understand the structural geology there, assaying everything, because you really, in these systems, you really can't tell which rocks have the gold in it. The quartz veins with gold, with visible gold in it, that's obvious. But all the previous operator did not really assay everything, and we're finding, other rock types that are carrying quite a bit of gold. Very similar. This property is very similar to the Red Lake geology. So again, a big benefit for us is having, some of the specialists from Red Lake now running the program here. We have year-round drilling here. There's no access problems with the highway. There's been a lot of forestry here in the last 20, 25 years, and has really opened this property up. One of the reasons it hasn't historically seen a lot of modern exploration. And because of that access and the way we've got our program set up with a core facility about halfway from our property to the town of Dryden, there's a lab in the town of Dryden. So our drilling costs are, lowest in the industry. We call it here 250, but actually more recently we're at about 220 a meter all in. So very low, very high grade gold across this entire property here. The previous operator drilled this one intercept of 53,000 grams per ton. I mean, it's but really from north to south here, down at Sheridan, we have intercepts, ground samples as high as 600 grams per ton, several over 100. The Gold Rock area is where this very high grade came from. High grade samples over at Hinman. Literally, all of this property has high grade gold at surface in either surface samples or drilling or channel samples. The similarities, I won't get a lot into this geology, but it's very similar geology to the Red Lake camp, and that's really what we think we're in here, the next Red Lake camp. The more work we do here and drilling, the more it looks like Red Lake. And so I won't go into this a lot now because I'll get lost in the weeds, but we have a fully funded exploration program this year that is targeting these high-grade structures We're focused about 50% of our money in what we call the Gold Rock target area, where we've really figured out the deformation or faulting structures to be able to identify the high-grade gold. And now we're also, as the more we drill, we're also seeing that other than and you can see this on this slide here, the red structures running southwest to northeast along the main deformation zone. These are the outcropping vein structures and a disseminated sulfide structure. This is what shows its surface. But what we're finding, and again, much like Red Lake, is all of these, as we're drilling more, we're seeing all of these stack structures. So there's actually a lot more going on here that nobody's ever discovered before because it just hasn't seen the modern exploration that is going on with structures that don't have surface expression, but are becoming more and more obvious and some very, it's really adding the potential ounces here to this project. Again, I want to point out that without getting too much into this slide, it's kind of just a blow up of the main part of the last slide, is that we've only been public a year and a half here. So we've gotten an incredible amount done in this year and a half. We get compared a lot to the companies out there that have been exploring their properties for 4 or 5 years and aren't as far along as we are. So, keep that in mind as you're, considering us for investment, is that we're a low market cap right now. The market hasn't really realized, I think, exactly what we've uncovered and are uncovering here. But some very high grade on one of these new structures that we found here that didn't have any surface expression. We hit, some incredible high grade gold of 300 grams per ton over 3.9 meters. And, we're just seeing that throughout the camp. And this is about 1 kilometer of strike in here. This is an area we're focused on that really is very wide intercepts now when we include all of these stacked structures. It starts at surface. It's starting to stack up like a really open pit scenario here, about 1 kilometer long. And, anywhere from this structure is running up to 60 meters, excuse me, wide in some places. This is a long section of that, just kind of shows that we've, where we've focused most of our drilling to identify what some of these, and figure out what these structures are looking like. And then we're going off like to the Pearl Zone most recently to identify more of those. So the next thing we're going to do is move from down here at the Gold Rock target area where we're working now that I've been talking about, moving up to another group of looks very similar that we mapped last year, the Mud Lake we call it, and it's about 2 kilometers to the north. Looks exactly like this area. So we're excited to get up there. What we want to prove to the market is that, look, there's something very big going on right here, but this is only 1.5 kilometer square area here. But we think we can find a lot more of these in the Gold Rock camp. So the first one will be the Mud Lake area, but behind that we have all of these different structures that we run through our evaluation program. So we have several targets in just this Gold Rock camp, which is about 20 kilometers of strike here, to explore beyond what's going on at this Gold Rock target area where we're currently drilling. The regional story here is also very big. This is a big property. It's 70,000 square kilometers. We own it 100%. We don't have any more payments left. Alamos was our landowner partner there that we've now paid off. And this year we've gotten 3 permits for drilling. I've just been talking about the Gold Rock area and that extension area to the north, the Mud Lake, but we also are now drilling down at the Sheridan area to the south. This is a completely different deposit model at Sheridan. It's an ultramafic rock, completely different deposit model, and some very high-grade gold down there. So we're currently drilling a first pass of drilling down there to see what those structures look like and what the gold content is in this. And and then we've got a second rig that's drilling down there right now. So then we're also regionally over at Sheridan. This is a property over here to the east, fully permitted. And in this year's budget, we'll be doing some channel sampling here. This is a very big footprint. Again, a completely different deposit model from the Gold Rock camp. This is granodiorite with quartz stringers in it. Very similar to the Goldland deposit that Next Gold has about 20 kilometers to the north of us. And we have a huge footprint here. If this is, we're only able last year to test a few targets in there, but got over 34 grams per ton in surface samples, several between 5 and 15 grams per ton. So we're channel sampling this area right now, and we're using a third party doing that work. So we should start to see results from that over the next 30 to 60 days. And if this small area has a good sized footprint of this, that's gold bearing here, this could get very big very fast, because we actually have about, give you an idea, the area we're testing here, right in here, is about the size of the Goldland deposit that Next Gold has. And that's 1.5 million ounces. But we actually have 6 or 7 kilometers of strike and potentially over 1.5 kilometers of width to this. So the footprint of this could grow very, very big. And what we'll do this year is we'll finish this initial channel sampling. If that comes back positive, we'll go in this fall and start drilling on this. So budget-wise, we were fully funded going into this year, have drilled about 10,000 meters of a 15,000 meter program. Of that 10,000 we've drilled, about 7,000 has been released. So we've got about 3 or maybe 4, as much between 3 and 4,000 still to come out of the lab on that. And then all of our field work, we're doing a full till program, soil till, and mapping our regional targets, that channel sampling that I mentioned at Hinman. All of that is paid in this year's budget, which we have not quite, exhausted yet. So we've got a couple million yet to spend in this budget here that we started last fall, what we call our 2025 program. But we also have just announced, and we'll be closing a week after next, August 12th, another financing of $7 million. And most of that will be exploration money, but it'll fund us well into 2026. This will actually be what we'll call our 2026 exploration budget. And because most of our field work is already budgeted in last year's budget, 80 to 90% of this new $6.5 million budget for next year will go into drilling. I estimate it'll be somewhere plus or minus 25,000 meters of more drilling that is yet to come without further dilution. So that's really the story. I mean, it's a great property. We've got an excellent team. It's high-grade gold. It's the geology that everybody's looking for. And it's also, as I said, there's different types of geology, much like Timmins or Val-d'Or, where you have different styles of mineralized deposits like we have at Sheridan and Hinman. The jurisdiction is great. We get along very well with the First Nations. That's the fact that we got 3 permits this spring speaks to that. We've got a great list of shareholders. It's really a who's who list, and we're fully funded, not only for the work that we've talked about getting finished this year, but going funded for 25,000 meters more of drilling. So that's I'm gonna stop it there, Jimmy, and open up, see if we have anybody who paid attention to me as I rambled through. You ran through this so quickly and has any questions.
No, it was actually very good, and thank you for that, Trey. Do you see the button on the bottom of your screen that says Q&A? You can probably see it directly. There's some that were submitted direct, and then I have others that were submitted beforehand. Do you see on the bottom with the red
Yes, I
3?
do. Yep.
Yep.
Yep. Okay, so you want me to just start these on the top? So when do you anticipate to exit the junior mining space? In other words, I'm assuming that question means what is our timeline for an M&A activity that would, basically we would get this thing to the point. I mean, let's keep in mind the major success story in junior mining, which may be, I think it's the best story of all time at this point. It may never be beat, is Great Bear, which is a neighbor for us, just 150 kilometers to the north. 2 years from the time they made discovery there to this, and they were about a 50 million market cap. They sold to Kinross for 1.6 billion. They also pulled a royalty off for shareholders. So I think most shareholders realized, closer to $2 billion. So that's the potential in these kind of things. We certainly have the property that could produce that, but we would be very happy with a fraction of that. So my goal is to be 2 to 3 years, and to be somewhere in the 300 million plus market cap. And I would point out a company, the market tends to jump on the shiny penny and the new success story. And the market hasn't quite figured out where we are yet. We are taking a longer term approach with a lot of what we're doing. But we've certainly had a real recent one was Onyx Gold that ran from a 20 million market cap to a $200 million market cap based on a few drill holes. You're good guys. They've got a great property. I have nothing bad to say about them, but I think that's the potential of how fast it can happen. And trust me when I say I can't even spell PEA. So we're never going to look at, I doubt we'll even, the Red Lake, or excuse me, the Great Bear model is great because they also never published a resource. All they did was the exploratory drilling, and they attracted Kinross and sold for a big price without ever publishing a resource. So, that's one of my goals, is to sell this company without ever publishing a resource. I'm not saying we never will, but I think I'm just pointing out it can be done. Second question is, are you looking to acquire the gold mines? The answer is no. We're very happy. We've got a large district scale play here. We've got our hands full. We're not looking to grow that way. This is an M&A story that, we're going to, as I said, build this up from a today 30 million market cap to a 300 million market cap minimum, and be selling it so our shareholders can, be acquired by a successful mid-tier or major producer. And they are all watching this stock. So what growth in ounces per meter or strike extensions are you forecasting based on current drill intercept? That's a question beyond my geological expertise. But look, we're hitting some very nice intercepts. It's clearly, and now what we've been hitting, as I pointed out, was more width with these stack structures that are underground that don't come to surface. So we're expanding the width of this whole thing in this 1.5 kilometer square area. And again, keep in mind that most of this high grade gold starts at surface. And at surface, we also have a low grade 1 to 2 gram material that runs throughout the structure there. So and then that gets enhanced where we hit the high grade shoots on there. So that's tough for me. I mean, again, at this point, we're not even thinking of ounces, but and resource, but just trying to show the huge potential near surface as we're hitting this high grade gold. I mean, when you're hitting 300 grams over 4 meters, it doesn't take a lot of that to add up to ounces. So any other questions you have, Jimmy?
Oh, we have a lot more questions. We have a lot that were submitted beforehand and some that were submitted after the event that you held.
Okay.
The use of funds, just to summarize, it's more long form. It's about, how are you dividing it among the different assets and the different targets, but just generally speaking, use of funds.
Okay, so in the current budget, we allocated about 55% of the budget to the Gold Rock target area where we've been doing the primary drilling. About 40% to the regional targets, Hinman and Sheridan, and Mud Lake to the north. So expanding the footprint, if you will, or the district potential of this property, which is something the potential buyers really want to see. They want to see that this isn't just a 1 kilometer square area, but that there's those kind of deposits all over the property. And going forward now, as I pointed out, the budget for this year included about probably about a third of the budget regionally was based on channel sampling at Hinman and the soil till program, mapping, and that type of thing, which going forward is already done. So pretty much I would say 80% of the budget going forward, and next, with this closing of this financing, we'll have about 6.5 million of exploration dollars. And I would say 80% of that's going to go into the drill rig. So there's going to be a lot of drilling, a lot of news. I mean, everything is, again, this is all fully funded. We probably will not be raising money again till, middle part of next year at the earliest. And there'll be tremendous amount of news flow between now and then.
Trey, thank you for joining us. I really do appreciate it. It's, as you know, our first Trinity Financing Investor Conference, and we really do appreciate the work that you're doing as a shareholder. To end, could you just give everyone a little bit of detail on how they could reach out if they're interested, and close it out?
Well, of course, you go to the website, and I'd also point out that, like the last company, I'm very accessible. Maura's very accessible. Of course, she's a lot better on the technical side for those kind of questions. If you go to the website, she does a lot of small videos about press releases, and really, I mean, I think we're really doing a great job of getting the message out that way, explaining what's going on, and I don't think that the market appreciates and pays enough attention to what we're doing there. But also on any of the press releases, my phone number is on there, my email is on there, Maura's phone number. These are cell phone numbers. These aren't, going to a answering machine somewhere. So, if you have questions or I'm again very accessible. I love talking to shareholders. And one thing, I never ask a question of how many shares you own. I don't really care. If somebody calls me, they're a shareholder, I'm willing to answer spend time on the phone and answer any questions they have. So,
Well, thank you again, Trey, and hopefully we'll see you soon.
all right, thank you, Jimmy. Say hello to your mother for me.
I will. Bye now.
All right, bye.
All right, everyone, hang in there. We have 2 more to go. The 2 uranium companies back to back. We have Myriad Uranium right now with Tom Lamb, CEO, and then we'll have Standard Uranium. We're bringing Tom in immediately.
Well, hi, folks. Thanks for joining. I know it's later in the day on the East Coast. I hope this is pretty interesting for people. If you believe in the uranium thesis, then we have one of the compelling companies in the space. As in any sector, there's always, a fair number of sort of average companies or below average companies. We are one that a prominent analyst in the uranium space is called the call option in the uranium space in North America. And I'll explain why. We're a high torque company. That means that there is risk, but the reward is probably worth the risk, I think, once you do the analysis. I want to mention that at the end, I'll give everybody my cell phone number and email. I'm on WhatsApp with lots of investors. I'm always happy to interact with any investor too. I noticed the gentleman that was just before me mentioned that. So you'll see in the cover slide here, 100 million pounds potential. We truly have the potential to be one of the biggest companies with the largest uranium endowment in North America. We have that potential. That is exciting for us and for investors, but also it's very appealing for potential acquirers. Explain how this works here. Let's see. How do I change this slide? Everybody's used to these legal slides, pardon me. The important thing to note here is that we have lots of uranium. In fact, a huge amount of estimated uranium, but that it was estimated several decades ago, so it's categorized as historical and not current under 43101. That's the Canadian regulation that governs the disclosure of mineral resource information. So the work that I talk about was done a few decades ago. This is a nice summary slide for people who just want to capture the whole thesis regarding Myriad. For those of you who don't already understand uranium and why everybody's so excited about it, there are two things happening. First, there's a fundamental supply-demand issue. The world mines 160 million pounds a year, and the demand is 200 million pounds. That's been going on for a while. Civil stockpiles, nuclear weapons, some other sources have been tapped over the last 5-7 years. Those stockpiles are now depleted, and the spot price of uranium, that's if you want to buy uranium today, is forecast to rise quickly, briskly from here. There's a second thing that's happening, and of course it's been all over the news, and that is AI and data centers. A year ago, I would not have even put this as a bullet in the slide deck, but this is huge. AI and data centers are coming on. I'm getting phone calls from tech companies, venture capital funds. This is all money that's coming into the ecosystem and will be coming in a flood. They need uranium to power the nuclear power plants. These are large-scale plants and also small modular reactors, micro reactors. This is all happening much faster than I ever anticipated. It's exciting times from a supply-demand point of view. Another important point is that there is no near or medium-term solution to the supply issue. There's one mine in Niger in West Africa called Dasa that may or may not come online sometime in the next few years. But other than that, Kazakhstan, the big producer, cannot crank up its production. Maybe you can increase production in Saskatchewan to some extent, but on top of that, the US produces maybe 2 million pounds of uranium a year, and Trump, because of his philosophy that things should be done inside the US, wants to get US production up from the 2 million up to its, well, what the US consumes, which is between 40 and 50 million pounds a year. That is not possible in any scenario, near term or medium term, but the political drive and support from the federal government and some state governments is there, and that's going to get big. So it's an exciting time to be in uranium. I'll get to all the slides, but this is a nice way to introduce the company. So that's the AI and supply-demand thesis. This is the be inside the US thesis that I've explained, because there's a big drive to produce the uranium inside the US. Whether it makes sense or not, separate question. It's happening. Our company and our projects, we're one of the very few, we're a bit of a unicorn. We're one of the very few companies in North America that has a large-scale uranium resource that was almost a mine, but never quite happened, and the uranium is there. Our Copper Mountain project, it's called Copper Mountain, but it's a uranium project, has 2 Cold War era producing mines in the center of the project area. Our Copper Mountain project saw a huge investment in the 1970s by Union Pacific Railway and California Edison. California Edison was partnered with Union Pacific Railway. They drilled 2,000 boreholes. That's a vast number of boreholes. They spent about 85, 86 million US dollars in today's dollars on our project. And they were planning on producing uranium at scale starting in 1983. But something happened. The 3 Mile Island incident, those of you who are old enough, like me, will remember 3 Mile Island, and the US uranium sector disappeared. Investment in the US sector stopped. If not for that, this would be a large-scale uranium mine today. So we've stepped in. We're the first group to unify ownership of Copper Mountain, and since 1983, and we've been drilling. You'll see it says imminent catalyst. We drilled 34 holes last year, and we've since assayed those holes, got great results. I'll tell you more about that. The metallurgy at our project is excellent. You get huge recoveries from heap leaching, which is a great way to process our ore. And of course, it's tried and true in copper and gold sectors. We're in Wyoming and New Mexico. Our second project is in New Mexico. Those are the top 2 states. Utah is also good, and a few others, of course, but Wyoming and New Mexico, we're right where you want to be. We have extensive historical data, and that guides us. Again, we have the 2 projects, and then we have management like yourself. Sorry, yours truly is what I meant to say. Yours truly, my colleague, Chairman Simon Clark, and others. We have built several companies from scratch, from literally a cocktail napkin to multi-$100 million, all the way up to Simon led American Lithium up to 1.3 billion or something. We built multiple companies from scratch and had exits, and we intend to do that here. So sorry to linger on this slide. I hope it is interesting for you. Let's take a look at what else we have here. So you can see the headlines here regarding Myriad. Proven leadership, I've talked about that. We've built these companies, and our technical team is excellent. One of the main points here is that our lead technical advisor, his name's Jim Davis, he was the general manager of the exploration of our project in the 1970s. He knows our project inside and out. He's very excited that we're back. He's telling us exactly what to do to advance it, and things are coming along very, very well. In terms of permitting, Wyoming is very mining friendly. They just permitted an open pit gold mine, so people who are worried about that. I mentioned we have a lot of historic data. And then here is the key headline. And I'm sorry it's taken this long to get to it, but our project, Copper Mountain, has 15 to 30 million pounds of uranium resource. That's historical. That was the starter resource for the large-scale uranium mine that Union Pacific had planned to fuel the California reactor fleet. Around the deposits that were going to be mined are 15 prospects that Union identified. Union believed that if you added everything up, you'd get to 65 million pounds and beyond. That takes us to, again, 65 million pounds and beyond. That makes us one of the largest uranium projects in North America. Now, the final bullet there, or section, talks about drilling. We drilled 34 holes in 2024. Huge success. We did better than the historical data indicated. But then things got better. We sent everything for chemical assay, and we're delighted to say that our project that was already going to be a mine in the 1970s, 1980s, has a lot more uranium in it than anybody ever expected. This is due to something called disequilibrium, and it was a huge surprise and a wonderful surprise. So our project that was already going to be a mine, we've just news released this within the last few months, has a lot more uranium than anybody expected. I've given you basically the high points of the deal. I prefer this to flipping through the slide deck, but this is our team. That's me on the far left, Simon Clark, our chairman, and George Funderwalt is our geologist in the white hat. These are two members of our drill crew. Again, Simon, our chairman, is a blue chip guy, and you see Jim Davis at the bottom right. He's the not only was he general manager of exploring our project in the 1970s, but he actually discovered the first uranium mine at Copper Mountain, which was extensively mined throughout the 1950s and 60s. Bit of a corporate overview. You can see our shares outstanding. We have an excellent cap table, a number of very prominent uranium investors who came in after extensive due diligence. Swiss Uranium Fund, a number of funds out of New York and Toronto. Stephen Detells, if people know him, he wrote $1 million personal check after his technical person did a 2-month due diligence dive into our data room. I have invested personally $650,000 of my own money out of my checking account into this company, and I will keep investing. Our moment will come, and we're going to have an excellent exit. I'm one of the big shareholders. This is where we're located in Wyoming. A lot of the in situ recovery projects are on the far right there, a little to the east, and we are a mix of conventional mining and probable in situ recovery. This is what our project looks like. The blue items in the center are deposits identified by Union Pacific, and all the orange items have been drilled, and locations were drilled extensively, but not enough to bring them up into deposit category. We will do that, and hopefully we get to 65 million pounds. It's also possible we'll go well beyond that. Those estimates are just down to 175 meters, and we have extensive uranium, it looks like, deeper than that. So that would be all new uranium. This is on top of the new uranium I just mentioned, due to that is related to disequilibrium. That's disequilibrium, to make a long story short, is where these probes that we use to measure uranium grades, either they get the wrong number. They either underestimate or overestimate uranium in the ground. In our case, the probes in the 1970s and our probe in last year dramatically underestimated the uranium content of the rock. We have excellent infrastructure nearby, railroads, highways, power. It's all within 5 miles of the project. That's what Copper Mountain looks like. It's a beautiful spot. This is our drilling last year. On the far right is, we like this, it's a sketch of the mine plan that Union Pacific had for our project. So I just want to remind everybody, we're a unique, almost a unicorn-like project. This was going to be a large-scale mine. It will be again one day, unified ownership of it. And if you believe the uranium thesis, our time will come. We have a low burn, and when we drill, we raise more money to do that. But we're just in a fantastic position to generate a big return for investors. And that's why myself and these funds and sophisticated investors keep coming in. We know that our time is coming. It's a little bit of the geology. I'm just going to speak for a few more minutes at Copper Mountain. The granite mountains on the far right, that's in the north, are uranium rich, and the water, meteoric waters, grab the uranium and transported it. Something else interesting happens at our project. There's a thrust fault at the bottom. See those arrows going in opposite directions. That hopefully has generated unconformity mineralization that would be like Athabasca. Let's see, we've just drilled uranium down at 1,490 feet, much deeper than anybody's found uranium there before. It was a very nice intercept, and that's extremely exciting. If there's uranium under there across the project area, which there's a reasonable chance of that, then we have one of the hottest projects in North America. We already think we do. Just want to take you to the bottom here. We have a lot of additional assays coming. This is because of the disequilibrium. I invite you to message me, ask me about it. I can get into some more technical detail about it. We have more drilling coming. We know where to drill. We have the potential to drill some of the best intercepts in Wyoming. They were drilled historically at our project, and we think we can duplicate those. We have the coordinates that will give modern, current confirmation of that historic work, and also really get everybody excited by publishing current, I don't want to use the word, we have these words for these things that are a little bit crude, but very exciting drill intercepts. They're possible, and hopefully they're coming. So just a few photos. That's our core shed. This is what samples look like. This is the drilling we did last fall, 2024. And the historic drilling is on the left. You can see an oval here. That's at the deep oval. That's where we intercepted uranium that has never been encountered in the past. I immediately had the CEO of a major call me when we released this news and said, wow, we're blown away. We've tracked this project. If you truly have uranium at depth, which you may, then you've cracked this project wide open, and you know, congratulations, everybody's going to be coming for you. So we'll see if that's true. We have that chance. The disequilibrium, by the way, boosts our grades significantly up to 60%. Anything over 1,000 ppm on average gets boosted 60%. And anything over 500 ppm using these probes, it turns out there's actually 50% more uranium. It's very exciting. As management, we're just blown away, and you know, the future's bright. Take a look at our PowerPoint on our website if you like. There's a lot more detail. We have great prospects to drill. We have a project in New Mexico that has high-grade uranium at surface, near surface. The basin itself probably has up to 45 million pounds, and we have 800 out of the 1,050 of the boreholes that were historically drilled there. That we use that as a proxy for the percentage of uranium that we have in the basin, we think. Also an exciting project. This is what it looks like. This is the same investment thesis slide. Exciting times for us. Upcoming milestones, maybe we'll uplist soon. There's definitely going to be a lot of M&A. And yeah, the next 6 months for us going to be very active, lots of news, and uranium sector's probably going to get pretty hot here. That's what the analysts think. I'd be very happy to talk to any of you anytime. Thanks, Jimmy. Okay, Q&A, here we are. When do you anticipate M&A activity? So when do you anticipate M&A activity? It's coming. It's coming for everybody with the top quartile of projects in uranium in North America. It's coming. I've said this publicly. We're already talking to lots of people. It's the issue for us, along with a few other companies in North America, is going to be fending off acquisitions so that we can get our market caps up. We want big multiples of where we are right now before we have to put premium bids to investors. So I think it's an ongoing thing that a few of us companies are dealing with right now. Now, if I were going to talk about other companies, I think the fall is going to get very active. We go to the World Nuclear Association conference in London early September. That's there are buyers and sellers of uranium, producers, juniors like us, and everybody gets together and things get active right after that. So that ends September 5th. I think the 2nd and 3rd and 4th weeks of September, things will get exciting. Second question, what is the timeline to earn 100% interest in Copper Mountain? We currently are at 50% interest. We need to spend another $800,000 to get to 75% interest. That is our earn-in limit under the agreement. However, there is always a path to 100%. We just have to pay fair market value. However, as I've told people in interviews, there's a really good chance we're going to find a way to get 100% of this project. And it really is a 1 + 1 = 3 situation where owning 100% will be really accretive to value. And I think people will see something relating to us getting to 100% within the next few months. What market cap do you want to have before really engaging in M&A? I would love to be at least 4x from where we are before we have to. People who have seen that PUR, Premier American, just bought Nuclear Fuels. They paid, I think it was a 54% premium. I think between 40 and 60% is the premium you're going to see generally. So I would like to be up in the 100 to 200 million market cap range at least before we have to put bids. See what happens in Canada. It is similar in the US. As soon as a bid is, the premium is big enough, management has to show the bid to shareholders and ask them what they think. But, you know, my job is to get everybody the biggest return we can, the biggest return possible. Fortunately, you know, by nature, but also by situation, I'm a huge investor in Myriad, and so are my friends and colleagues. Our job we're very aligned to get the biggest return we possibly can to shareholders, people who own equity. So, you know, we're going to try to really focus on that. How do we generate the best return for everybody? What is the market missing in terms of valuation? And what are the key catalysts for re-rate? Great question. So we do think, and others think, that we should be up in the $1.35, $1.85 range, $1.35 US zone right now. We have multiple analysts. We have one that published analyst, and then we have others that we talk to, and people will see more analyst coverage of us soon. We put this project into a small shell company, effectively. We did that before we understood that this is a big project that belonged in a SPAC, or should have had a $50 or $100 million market cap when we launched. We didn't know that the project was so big, and neither did the optionor, neither did our counterparty. So, this is all going to be understood eventually. It is how the markets work. However, we have to wait. But the moment will come, and I think that's why we feel like we're coiled steel. We're a spring that's going to jump in value. Key catalysts. I think when we put out some assays soon, this is additional assays from our drilling. Hopefully we show that and reconfirm that there is new uranium. So the project could stand on its own. We almost could do nothing, and I believe people would come for us. We're one of the very few projects with a large uranium endowment in the middle of Wyoming, the #1 jurisdiction in the world. We could, I think our value would go up just as people figure this out. But we've done some drilling. We hit it out of the park with the drilling, and now these additional assays, the penny will drop for a lot of people. They're going to have to come in. I think so. More assays coming. I think we're going to list on another exchange. We may switch to the venture and perhaps a US exchange with a lot more liquidity, a lot more visibility. That will help. And analyst coverage. Banks and analysts love us. They are excited about our future. So this will all happen. Thanks, Jimmy.
Yeah, very good, Tom. That concludes this section. So I appreciate you joining us, and hopefully we'll get to see you soon in New York.
Very good. Look forward to it.
All right. See you soon.
All the best.
Bye-bye. Hello, everyone. Thank you for attending today's Trinity Financing Investor Conference. For our last presenter, we have Standard Uranium, traded on the TSXV under the ticker STND.V, and on the OTC under the ticker STTDF. We're joined by CEO John Bay and VP of Exploration Sean Hilliker. Okay.
Thank you very much, Jimmy. It's a pleasure to be here. Today, myself, John Bay, and Sean Hilliker will introduce Standard Uranium to your audience. So first of all, it's a pleasure to be part of this conference, and I hope everyone has some great insights after watching this presentation. So from the top, Standard Uranium, we are a Canadian junior exploration company focused on uranium, pure uranium, and we're all in Canada in the Athabasca Basin of Saskatchewan. This map you're looking at right now is the Athabasca Basin, which is the northern part of Saskatchewan. And you can see a number of those white circles around the basin. Those are our 13 projects. In the southwest corner, you can see the Davidson River project. That is our flagship project, and we're going to be primarily talking about that project today. The theory we have is we've got a great land package with hopes of making a high-grade uranium discovery. We want to provide the fuel to power a clean energy future. And for those of you that are unaware, uranium is the fuel that powers nuclear reactors and clean energy all across the globe. And the world is moving to a cleaner future, and uranium and nuclear is going to be a large part of that. On top of being an exploration company, we're also a project generator. And what that means is we have other companies join with us to pay for exploration to actually work on some of our projects. And we get paid cash and shares, and they pay us to operate those projects. And we'll get into that on a later slide. So let's go to the next slide, Sean. So what's essential if you're going to explore for uranium and anything actually in Canada is you've got to have a number of things working for you. Number one, you have to have a team of geologists that know what they've done. We have built a team of 5 in-house uranium-specific geologists, all working with Sean in Saskatchewan out of our Saskatoon office. Our projects are not just area plays. We actually have staked each project specifically for their merit, and they have great geological merit. Number three, First Nations are essential. If you're going to work in this part of the world, and most parts of the world, you have to have good First Nations partners that actually want work to get done and want to work with you. I can tell you that we have got First Nations agreements across all of our projects, and that is remarkable. Exploration permits go hand in hand with that. If you can't get exploration permits, you can't do the work. Since we've been working in this part of the region for over a decade, we've got great relationships with the government, and we can get permits done with the help of our First Nations very quickly. And all our projects are permitted right now for exploration. Once you have those things, you have to have people to do the work. Saskatchewan has a great workforce, and on top of that, we have skilled vendors such as drill companies, helicopters, camp providers. All those are in place across all our projects. And of course, you need capital. If you want to work your projects, you have to have access to capital, and capital becomes available when people are excited about the sector you're in, and people are excited about nuclear and uranium. So right now is a great time to be investing with uranium companies. Our board and management have also got experience across the uranium sector, the capital markets, working in Canada, the US, and around the globe. So thank you. Next slide. Here's a quick company snapshot. You can see the map of the Athabasca Basin on the right side of the page here. You can see all those projects, and you can see a couple things that are kind of key. The bottom left corner, you can see the Davidson River project in blue. That sits beside some world-class uranium deposits, which we're going to get into next. I mentioned our strong team. Nuclear power is going through a great renaissance right now, and we've got some great short-term catalysts, including a follow-up exploration drilling program on our Davidson River project about to start in the next month. Next slide. So here's a quick snapshot looking at who our team is. In the top left, that's myself. I'm the chair, the founder, and the CEO. Neil McCallum joined us as one of our first directors and lead technical director when we started the company back in 2017. Sean Haliker next. Sean joined us in 2020. Sean had a great run with a company called Next Gen Energy. Sean joined them right out of university, spent 7 years with them from the time of discovery of the Arrow project right up until he helped write the feasibility study. Sean also did his master's degree on their Arrow deposit. And that is crucial because that Arrow deposit is right across the street from our flagship Davidson River, and that's what we're going to be exploring next. Next, we have Vivian Chuang. She is our newly appointed CFO. She came to us from the Jasper Fiore Group. She is a great CFO. We're really happy to have her on board. Mike Young is an independent ex-CEO of a uranium company called Vimy. He's now based back in Canada. Zoya Sheskova, she is part of our audit and financial team. Blair Jordan and Ken Judge, both lawyers, and Blair comes from a banking background and Ken more the capital markets and M&A side. So that's our team. Next slide. Okay, this is a slide showing you the southwest corner of the Athabasca Basin of Saskatchewan. That big blue project on the bottom left corner, that is our Davidson River flagship project. You can see by looking around this map, there are many other peer companies. NextGen to our north and east, Orano, $30 billion company, Paladin directly to our east, which is now a $3 billion company. They just acquired Fission and the Triple R deposit. And then NextGen, of course, has their Arrow deposit. We see Orano, we see PurePoint, we see Cameco, a $40 billion company. And of course, Davidson River with an incredible land package right in the middle of this. Sean Haliker, our VP of Exploration and President, is going to walk us through some of the geology of this region and why we're so excited about working Davidson River again. So please, Sean, hop in here and then talk to us about the project.
Thanks, John. Sounds good. So as John mentioned, this is kind of where I cut my teeth in the uranium business. I've been a uranium geoscientist for the last 12 years, and this is my stomping ground. So when I came over in 2020, our main exploration thesis here was to essentially copy and paste what we did at NextGen, and find the next world-class basement hosted uranium deposit in this area. So I'm going to walk through a few things on why we think we can do that and why we are positioned to do that, from a geoscience perspective, as well as experience perspective with the team that we've built. So as John mentioned, in this area, this has kind of been a hotbed of exploration over the last decade since the discovery of Triple R and Arrow in 2012, 2013, and then a number of other discoveries you can see all around us. So Davidson River is more than 30,000 hectares. You can see the project here again. outlined in blue. We've got 70 kilometers of prospective strike length, and I'm going to talk to you about why that's important today as well. So on this map and on the previous map, you can see all these gray corridors, these gray lines on the map. Those represent what we call conductors, and that's just simply packages of rocks with graphite in them. So since they have graphite and sulfide minerals in them, they create a conductive response, and we can actually map those out with geophysics. So you can see that pretty much all of the discoveries and deposits in this area sit along those trends, those conductor trends. And we like to say, you know, a lot of people in the business like to say like pearls on a string. So you can see Triple R, you can see Arrow, Spitfire, and a number of these other ones. You know, you just see them sitting along those corridors. So that's important because these conductors actually create the plumbing system for the uranium to come in and create a deposit. So in simple terms, that's what we're looking at here. And as John mentioned, Davidson River is not just an area play. So this map shows that pretty well. In this area, in the southwestern Athabasca Basin, the rocks are actually folded up through to the northwest, right through our project. So we know that there's world-class uranium endowment over here in the eastern side of this limb with Arrow, Triple R, Spitfire, and others, and the new PCE discovery as well by NextGen. And then our whole exploration thesis and, you know, for Davidson River was we expect to see the exact same thing over here on the western side. And with the new discovery of the JR zone, the previous discovery of Smart Lake, as well as the new Tetra zone there as well, we're starting to see high-grade discoveries be made over on the western limb of this fold. So the main takeaway here is we are in the same rocks, along the same trends, and it's essentially a geological mirror image of what we were seeing at the Arrow deposit at NextGen and with Triple R. So we've drilled this project a few times. That was the first step and, you know, box to check was to come over here, start drilling. No one had ever drilled this area before until we got our hands on it. So the first thing we wanted to do was prove out, do we actually have those same rocks on the project? And the answer is yes. So a few core photos here from our past drill programs, just kind of proving that out. These dark colored rocks down here with the Wario and Bronco corridors, those are those conductors I was talking about. You can see that they look like your pencil lead. They are full of graphite, reactivated, broken up, and creating that plumbing system for the uranium to come in. So that's a big check mark there. These look just like the rocks we were pulling out at NextGen around the Arrow discovery and before we made that discovery. Another couple important things to note is, you know, we have the plumbing system. Do we have the fluids that we need to create a uranium deposit? We've got elevated uranium across all four corridors. We've got other interesting alteration types that are typically associated with uranium. And now we're just vectoring in, looking for that high grade hit. And I'm going to tell you how we're leveraging some really new and exciting technology to do that here. So we haven't actually been back to drill Davidson River since 2022. We've done in total a few drill programs there, just over 16,500 meters. But like I said, the scale and of the corridors and strike length and this project, we're just scratching the surface here. So what we've been doing recently in the background is partnering with a few different technology companies. One of those is Gold Spot Discoveries, ALS now. We've done some really interesting work with them, leveraging some AI and machine learning techniques. What we've done there is looked at data sets that we have over top of the Davidson River project and compared those directly to data sets that are publicly available over top of Arrow, over top of Triple R, and we know what the footprints of those deposits look like. So what we did was train an algorithm to go through our data and compare it line by line with the data over top of those known deposits. So lo and behold, the Davidson River project lit up like a Christmas tree, and now we have that layer of data to help us target going forward as well. So more recently than that, we partnered with another company called Fleet Space Technologies. They are out of Australia, actually an aerospace company that is kind of taking the mineral exploration space by storm. So we're really excited to be working with them. They identified this project as you know, the highest potential to make a new discovery in this region. They've been working with a couple other big uranium players in the basin, namely UEC, ISO Energy, over on the eastern side of the basin. So we're actually the first ones to partner with them and do this type of survey in the southwestern Athabasca Basin. So on this map here, you can see Davidson River once again, our 4 major trends, Saint, Warrior, Bronco, and Thunderbird, as well as the 3 survey areas that we did with Fleet Space in highlighted in green there. So it was really interesting working with them and coming in. They believe in this project as well, and actually came in for equity in the company to get this this first survey done in this region. So we're all very excited with what we're seeing so far from that survey. So these surveys were just completed. We're getting the data back and processing that now. And without getting too technical or into the weeds here, essentially what this technology is going to do is help us image the subsurface and give us indications on where these big alteration systems and arrow type targets are along the 70 kilometers of strike length. So this image here, I'll just flip back one more slide here. We're looking at, I'll give you a couple examples here on the Bronco corridor. So we're looking at this this cross section here along this Bronco grid. Looking east here, you can see the few of the drill holes that we've drilled. And like I said, we're just imaging and get a 3D model of the subsurface to help us vector into new targets. So key things we're looking at are these big features in the subsurface that indicate big significant structural traps that, like I said, in those plumbing systems, this is how it traps and forms uranium deposits in simple terms. So you can see the striking resemblance here with this feature to this idealized model of a basement hosted uranium deposit here. So these are the types of things we're getting excited about, that we're seeing in the data and that have not been tested yet on this project. So we can leverage this new data with Fleet Space to start mapping these big structures out, looking where the plumbing systems open up and provide space for uranium deposits to come in. So this is a key feature of the Arrow deposit, of the Triple R deposit. It's all structurally hosted within these plumbing systems, like I said. So adding on to that, we did 2 other types of geophysics at the same time. We called this a multi-physics survey. So we actually did 2 types of passive seismic and then gravity as well. How we found Arrow essentially is a gravity target with an EM target. So we haven't had that key layer of data on Davidson River yet to target. So that's what we've added with this. That's what we're really excited about. And we're going to be going back to drill this summer. John, do you want to make a comment there on our JV model here before I walk through Sundog and Corvo?
Yeah, exactly. So as Sean and I alluded to earlier, on top of being a pure exploration company, we actually have JV agreements in place with several companies. Sundog is a perfect example of that. This is going into year 2. How it works is we will stake a project and then we will spend our own money advancing that project until it's ready to be explored further by drilling. And how that works is we'll do some geophysics, we'll do some ground truth sampling, and then we'll have all the permits in place. We'll get the First Nations agreements in place. We'll get all the vendors lined up, and then our team of geologists will actually run the project for the new partner. So we'll find another company that's coming into the space. 2023 was a great example when many companies that used to be other companies, whether they were lithium or other sectors, they decided they wanted to be uranium companies. And the best place for projects is the Athabasca Basin. So they showed up where we are. They couldn't get land because the place was completely staked up. And if they could get land, they couldn't find vendors to drill it. They couldn't find geologists that knew what they were doing. So we had the perfect opportunity. They could come partner with us and spend money on our projects to earn into one of our projects. So we made several of our projects available. The Sundog is one of those. And Arrow came along and became our partner. So typically, how our typical deal works for us is it's a 3-year earn-in. So over 3 years, they will pay us cash and shares, and they will pay us to operate the project, and they can earn up to most likely 75% of that project, and we keep 25%. On top of that, we keep a 2.5% NSR. So it's great for us. It's great for them. They get to come into the project. They get exposure to the Athabasca Basin and uranium, and our company gets to work the project, keep 25%, and have cash and shares coming in, which basically covers our G&A and is a nice project generator revenue model. So we, as an exploration company, actually generate revenue, which is a fantastic opportunity for our shareholders and for our team to move those projects forward. So Sundog, why don't you walk us through Sundog, Sean, and then take us into Corvo as well.
Sounds good. So this project is up by Uranium City. Obviously, Uranium City is aptly named. There's uranium everywhere up here. We talk a lot about high grade uranium. When I say high grade, I'm talking about anything more than 1% U3O8. So, compared to other places and other producing places around the globe, the grades here in the Athabasca Basin are really what makes this place special. So you can see a few of the examples here, 17%, 12%, 9.5% right at surface here, which makes this one of the really unique projects in our portfolio. And again, on this map, you can see these red and orange lines coming through here. Those, once again, are the conductors, that plumbing system for the uranium. There's actually a past producing mine on this project as well called Gunner, produced about 18 million pounds there historically through the 50s through to the early 80s. And we are kind of coming back and breathing new life into this area with our modern technology and modern understanding of how these deposits form. So, as John mentioned, we are now into year 2 with our partners at Arrow Energy on this project. So we've drilled this in the past, hit some uranium in most holes. We're looking for that high grade intersection, things over 1%, and we're vectoring in on that, testing new areas, doing new surveys, and we actually just completed a gravity survey up here, and we've got brand new targets next to the uranium hits that we did have last summer. So we got another drill program lined up to get executed on this, which will again be funded by our partners at Arrow Energy and operated by us. So we're excited to get back up into this area as we've been developing targets here over the last few months. Flipping over to the east side of the basin, on this map here, you can see a number of our other projects, as well as the 2 current producing mines, Cigar Lake, MacArthur River, and then all the infrastructure and other deposits and discoveries over on this part of the world. So I'll highlight Corvo here. This is a new deal that we just got done with our partners at Aventus Energy. I was actually just up in the field there, trudging through the forest, looking for high grade with our technical team, and we had some good success to go ground truth some of these historical uranium showings. This project, like Sundog, is quite unique, having uranium right at surface, which doesn't usually happen in this area. So it's very exceptional. You can see the road coming up here. It's very, very accessible project, and I'll highlight the Manhattan showing on this map, which is that red oval highlighted up there in the northern part of the project. So that has historical samples of almost 6% right at surface, 6% U3O8. So we wanted to get in there, get boots on the ground, and ground truth that showing, as well as several others across the project. So we did just finish that last month. And we're looking at brand new data on here. You can see once again, there's our plumbing system. We've got almost 30 kilometers of strike length on this project, ripe for discovery here as well. So we've completed new geophysics there, and we'll continue to ground truth and then do another geophysical survey in the winter to have our drill targets ready for our maiden drill program with Aventus next winter. So looking forward to what we can uncover on this one, and really good indications that we can get into something exciting here as well. Back to you, John.
Thank you, Sean. Yeah, it's good for listeners to understand that a typical deal like the Corvo one, which was signed a few months ago, a cash payment is like $50,000 in year 1, $125,000 in shares, and then a commitment of $750,000 of exploration work in year 1. Moving on to year 2, those numbers pretty much double. I think it's $1.5 million spent on the ground, and the shares is both double, and the cash I think goes up to $75,000 for the year. So it's a great way to drive cash into the company shares and keep our projects working. So this is the final slide of our presentation, some corporate information. You can see our stock chart there. People ask us, what happened? Why that big blip back in early June? There was a couple things that happened. Number one, we announced, you can check our news releases, we joined the back office with the group called the Jasper Group, which is partnered with the Fiore Group. They are very well recognized in the mining space. We've added Gord Keep to our advisory group, and we added in a new CFO and corporate secretary. So people really like that movement. On top of that, Sprott has an energy fund called SPUT, and they announced that they were going to acquire more uranium from the spot market. So they announced a $100 million raise, and they quickly doubled that to $200 million. And that got the uranium market pretty excited. And the spot price of uranium jumped from $70 to $80 in a week. Now, over the next several months, that trickled back down to where we sit today at around $71. So that's typically what happened with most stock charts. They sort of followed that the movement of the spot price of uranium. So you can see our capital structure. We've got 78 million shares outstanding, 102 fully diluted. You can see our share price and market cap. It's a great opportunity to get to know Standard Uranium, because as we begin this next drill program on Davidson River, that is the opportunity for shareholders to really have success in this region. Uranium, is very unique. A uranium discovery in a high grade can have a massive impact on the share price. Many of our peers have had, movements of 5x, 10x, 20x on a successful drill program. So that's what we're trying to do, make a high-grade uranium discovery in this region. And we know if we do that, it's going to be game on, and we're really happy for us and our shareholders. So thank you very much. That is the basis of our presentation today. And I'm going to invite Jimmy to come back and ask us a few questions. So come on back, Jimmy.
Very good. Thank you for that. I'm cognizant of time. We do have just about 3 to 4 minutes, and I do have quite a few questions, some more technical too. So I'll run through it very quickly, and we'll see what we can get to. Number one, the physics modeling at Bronco integrates ANT, HVSR, and gravity. How confident are you in your structural interpretation when correlating these data sets with drill intercepts to date?
That's a great question. So it's a unique situation, that we've already drilled this project and then came back to do those surveys. So the ANT, HVSR are the passive seismic, like I mentioned. So that gives us a good layering model and allows us to correct for the overburden and that cover sequence that we're not interested in, and actually image into the basement. So identifying these different structural features, using that technology is pretty, I'm very confident in it. Actually, it's pretty reliable. And then having that drill hole data there with our already interpreted structures, this totally backs it up. So it's nice to already have our existing structural model vindicated and validated by this new data set. So that's what we're seeing. And then in addition to that, using the ANT and HVSR, we can actually terrain correct the gravity, which is the key piece here. So that gravity outlines these alteration signatures, which is, like I said, kind of the piece that we've been missing. We've been hitting the plumbing. We've got the uranium in the system, but where is that big juicy alteration system around the high grade? That's what we're looking for. That's what the gravity shows us. Like I said, that is essentially what Arrow was a gravity bullseye with an EM break. So comparing that, using that exploration thesis, we can allow ourselves to target effectively and use this new data set to really help us vector in where along those conductors to drill next.
Next one, at the current market cap with multiple district scale land packages, how are you thinking about optionality? Are you considering spinning out assets or selling minority interests to fund core exploration without further dilution?
Yeah, that's a great question. And that's exactly why we transitioned to the project generator model, Jimmy. So back in 2023, we made that shift and immediately had interest from several partners. We currently have 2 projects under JV deals and 2 more in the works right now. Having those second tier projects of ours do the JV model allows us to drive cash flow in and also keep our team working all year round with upside and all those projects getting worked. On top of that, we have done 1 deal already to sell off 90% of one of our projects, and that is another model we will look at for second tier. We don't have plans to do that with Davidson River, our flagship, just our second tier, and that does bring in non-dilutive cash flow throughout the year. So it's wonderful to have that optionality to do that.
Are you vectoring this is a technical. Are you vectoring towards a basement hosted unconformity model, or are you seeing signatures more consistent with overlying sandstone hosted targets like those at McArthur River?
Great question. It totally depends on the project. So on Davidson River, like the biggest value proposition we have here is, discovering the next Arrow deposit, so to speak. So that target on Davidson River is purely basement hosted high grade uranium, just like the Arrow deposit. So that's what makes Arrow special as well, is it's different than those big deposits that are producing like Cigar Lake or McArthur River over on the eastern side of the basin, or Hurricane, that is, one of the best resources in the world sitting there waiting to be mined, which is a completely sandstone hosted deposit. So depending on where you are in the Athabasca Basin, that model changes. And, we always like to look at the 2 end members, But, some of these are kind of combination deposits where you have a sandstone component and then you have that basement root as well. But on Davidson River, what we're looking for is a basement hosted deposit, just like Arrow, and then over on our eastern projects, we're exploring for unconformity related uranium as well. But for instance, as well, we're at Corvo. We are just outside of the basin as well, so no sandstone cover there. Very shallow targets and a basement model there as well. So that's another thing just to look at across our projects is all the targets we're looking for are also very shallow. We're not looking at kilometers deep and that type of thing. So if we find something on any one of these 13 projects, the economics should work out nicely in our favor.
We have probably 4 more, I think. So I'll just hit one more. This one seems
Okay.
pretty interesting. Just big picture, how are you preparing to capitalize on market attention in Q4 when seasonality favors uranium? Is there investor visibility strategy or an inflection point that is being targeted? How are you going to be updating the market?
Yeah, that's a great question. So those that aren't aware, there is great seasonality in the uranium space. Typically, as the summer goes through, it's pretty quiet, and the stock market is usually pretty flat. As we get to the end of August and into September, there is the World Nuclear Conference, which kicks off in London each season. That is a big sort of starting point to the year, and we'll have to see all the uranium companies, all the fund managers, all the people heavily involved in the uranium space will all be there, and that sort of kicks off negotiations on contracts, and we start to see utilities sign deals with the major uranium developers and producers. And that usually we start to see a nice run in the spot price of uranium, which kicks off a lot of excitement in the space. The retail market gets excited again. For us, we're going to be marketing hard as well. We're actually starting our next drill program on Davidson River at the end of August, and we'll be drilling Davidson all through September and into October. A great time to have results coming out. We'll be marketing, putting out corporate videos from site, and be lots of information to the market. On top of that, Sean and I have got, conferences we're attending at the end of September in Ontario, the CEM conference, and then we'll be heading into Europe on the back of our drilling to have a few marketing roadshows through Europe, and then back into North America again. So strong marketing plan. Great exploration program happening at the same time. So it's a great time to keep your eyeballs on Standard Uranium.
Well, with that, we will conclude today's presentation with Standard Uranium. I want to thank Sean and John again for joining us and sharing the story with our wider audience. I'm going to give you about 30 seconds to a minute to just close it out, tell the audience how they can reach out to you, and thank you again.
Thank you, Jimmy. Well, this slide you're looking at right now gives us all our contact information. So please reach out to us through an email or set up a phone call. We'll be happy to further explore this with you. Once again, you can find videos of us. We post a lot of stuff on social media, especially when we're active at site. So we can also look on our website with lots of future upcoming news, lots of previous news releases, and lots of video content. You can go back and see what we've been doing for the past few years to see how active we've been on the exploration program. Once again, it's John Bay and Sean Haliker from Standard Uranium, thanking Trinity Financial, Jimmy, and Trinity herself for setting this up, and we look forward to talking to you again. Take care, everyone.
Hello, everyone. This is a long day, I know. I hope you have a great time to hear from the company. And in the future, if you have any question, you can contact directly to CEO. If not, you can contact me or Jimmy. We will get all the answer for you. Thank you very much. Have a nice evening. Goodbye.